Good evening, friends. Now we are playing ICI motto song. I request all to put their right hand on their heart. Friends, we are fortunate today that we are having our chairman of Ahmedabad branch, CA Penal Shah, with us. Now I request chairman of Ahmedabad branch to address the participants. Thank you very much.
Thank you, Bishan bhai. The speaker for the evening, Advocate Shri Hardik Modh. I can say the Secretary of Branch CA Bishan Shah and also panelist for the evening, and CA Rahul Maliwal, the Chairman of Direct Tax Committee and Treasurer of Ahmedabad branch, and also panelist for today. Like, branch is so lucky that whenever they want to have any kind of panel discussion or program, right, we are never dearth of any speakers, right, when we have such a learned speaker in our committee itself. So I thank you all and I welcome you all to this particular session where we are going to discuss on, we are going to have a deliberate discussion on GST litigation procedures, followed by the panel discussion, so that whichever queries were not being redressed till now in this advanced GST course will be taken over by the learned panelists present here, and will try to address it in a most possible best manner. Friends, before we move ahead, I would like to convey that more fruitful qualitative programs are planned and they are to come. Like from months to come, now we are focusing more on qualitative programs rather than going on quantity of programs. Apart from that, friends, you might be aware of that the fitness challenge is going on in the branch, and I'm very happy to say that more than 600 chartered accountants have participated and are daily running or are participating in the same. So there's a very good sign for the chartered accountants of Ahmedabad. And if you feel that you have missed out, soon join in the next challenges to come. Apart from that, on this Sunday, that is day after tomorrow, we are having a blood donation camp. As soon as I say with respect to blood donation, you might be thinking that in COVID-19, one should not donate blood. In COVID-19, it is risky to donate blood. But friends, we assure that we have made all kind of safety arrangements that it will not be risky. And it is extremely important that even during COVID, one can donate blood. There is no such restriction. And friends, because of this misconception, very less people are donating. And because of that, the children who are having thalassemia are facing a huge loss because they are not getting blood in time. So we being learned people, we being aware people, I request you all, I urge you all that you can come, you can bring your family members and friends and try to spread the awareness, because there is really a need of blood for the children who are having the problem of thalassemia. Apart from this, friends, if you have any kind of suggestion, you can come up to us by writing a mail to us in case you want any such kind of fruitful programs, so that we can arrange the same. And right now, because of this virtual sessions, we can have the best faculty from all over the India. To end up with, I can say that this series of advanced GST course was very fruitful, because the main pioneers, that is Bishan and Rahul bhai, made the whole planning, and you can say that they collected all the queries well in advance, was given to the speakers, and so it was addressed well in advance. Apart from this, friends, we received various emails on branch that earlier this was on morning time, and now this is going to happen on an evening time. So it was not visible for few chartered accountants to attend the same. who have already registered and it was not possible for them to attend. So we have decided that we will provide, once this session will end by tomorrow, right, we will provide the link of this sessions only and only to the registered participants, and only they can access this particular videos, so that in future those who attended, they can also take the benefit of that in future, and those who have missed out because of their evening schedules, pre-scheduled meetings, they will also be able to take the benefit of the same. And soon, within a week or so, once the background material is received, you will receive an SMS and email. Then you can get, by anyone collected, the office utility gift which we promised you, and also the background material on GST, the latest updated background material on GST, which will really prove a very best helpful resource in your office when any kind of query comes with respect to the GST issues. So at last, I would rest myself by thanking to all the speakers who participated and contributed their knowledge to the betterment of the branch members, also to the coordinators of this particular series, also to Rahul Bhai and also to Bishan Bhai for making this series the best one. And yes, absolutely to all the members, without whose support this would not have been possible. So thank you. And now I request Rahul Bhai to take the session ahead.
Thank you.
Thank you so much, Penal Bhai. Thank you for motivating us from the front, be it in relation to the fitness or the blood donation, or in relation to the GST, by assisting and providing the best background material to our members. Now, coming to the today's topic, we have the faculty with us, Hardik Bhai, the secretary of our branch, Bishan Bhai, and the coordinator of the session, CA Session7&8. Welcome you all. Now, the topic for the today's session is the GST litigation procedure, and for that, you can say you all will agree that the Hardik Bhai is the one of the best person that who can deliver in that particular topic, because he is daily practicing in that particular area only. And at the same time, we have the along with the GST litigation procedure, we have the sessions with respect to the various judgment of the high courts and the advance ruling. And in that particular, you will come to know that in case of the Mohit Mineral, he himself was appearing on behalf of the petitioner. So it would be very fruitful for all of us to get the insight from him. At last, there is one announcement that tomorrow we will be having the special seminar from 5 to 7 of Jigar Bhai in relation to the place of supply of the services, that is of section 12 and section 13. So the link would be sent to you shortly. Now I will request CA Session7&8 to introduce our today's faculty. Thank you.
Rahul Bhai, just to interrupt just a minute. Yeah, Rahul Bhai, can you announce with respect to tomorrow's session? Is it tomorrow or?
Yes, the session is on tomorrow, Saturday, 5 to 7 in evening, and it is the Jigar Bhai session, which was held on 8th of July 8th of July, and the part was not yet completed. So we have carried forward the same to the tomorrow, and in that he will be going to deliver on the section 12 and section 13 of the place of supply. Yes. Now I'll request Sachin to kindly introduce, sir. Sachin, can you listen?
Hello. Yes, all there.
Kindly introduce.
Yeah. A very warm welcome to all of you. Hardik Modh sir has completed his LLB and CA in the year 2001 and 2002 respectively. He has been a rank holder in intermediate exam held by ICAI. Mr. Hardik Modh sir is a partner in economic law practice firm since 2007. The said firm is having offices at Mumbai, Delhi, Ahmedabad, Pune, Bangalore, Chennai, having strength of more than 200 advocates. He is also a member of Bar Council of Gujarat since 2006. He has handled various cases of the Customs Act, Excise Act, and the Finance Act 1994, GST Act, company law matters, arbitration matters, etc., and appeared before various high courts and other forums across the country. He is also invited as speaker by various associations and institutions like Income Tax Bar Association, ICAI, Gujarat Sales Tax Bar Association, etc. Now I would request Hardik sir to take this session.
Yes. Thank you, Chairman of this Ahmedabad branch of WIFC Ahmedabad, Shri Bishan Shah, Secretary, Shri Rahul Maliwal ji, Chairman of the Committee of Direct Tax and Indirect Tax Committee, Sachin Bhai, and all the other members. Thanks to this panelist as well as Chairman and Secretary to give me this opportunity and to speak on my favorite subject. And as Rahul Bhai said that yes, from day one of my practice, I've been practicing on this side. And when I'm given opportunity to speak on this subject, I'm sure that I would try to justify to my subject and try to share my knowledge about whatever my experience and everything on this side. So if we go on the subject is a litigation procedure. And you know that now just we finished 3 years in the GST. And we started with the 4th year, and the 4th year is not good year for businessmen and for everyone because of this COVID. And I wish that all the members and their family members are safe and good in this COVID. And we know that now department has started audit procedure. They started issuing the notice. Even they have started to take actions for non-payment of GST. Even there are various litigations. So what is going to happen now? Because till time we have a scenario to understand the subject, yes, where the liability is there, where we can avail the credit, what is the classification, what is the rate of duty. So now that scenario has gradually gone, and now the time has come to test that what we have advised to our client, whether it is right, wrong, because I'm sure that there would be so many litigations. And when I'm saying there's so many litigations, for the reason that the officers who are doing the work, they have experience, like in case of the central employees who are coming from the excise and service state, they have knowledge on that subject. GST, they have, I don't know to what extent they have read it, they have experience with the subject. Similarly, in the case of VAT also, there is a similar experience. And therefore, they always try to adopt what the procedures were there, what the law was there earlier, they try to implement that law under this GST. And you know that when people has not completely acquainted with the subject, they create issues. And it would be no doubt, as being a professional person, chartered accountant and lawyer, we try to convince of these officers during the course of audit, during the course of investigations, and whatever may be the situations. But the officers are very adamant, and therefore this situation converts into the litigations. And when I'm talking about the litigation, I have tried to justify my subject in these two manners. When we see the litigation, there are two things. One is the writ litigations, and second is the statutory litigations. So in case of the writ, that starts either from in the High Court or the Supreme Court. And when we talk about the statutory provisions, that means under the GST law, what the remedy is available to us, that would be under statutory provisions. And in the statutory provisions, if we see from the perspective of the litigation, or I would say that from the perspective of the proceedings, when the adversary situation or compliance situation ends and the litigation starts, that I may say that it starts from the adjudication authority. So there is a first stage is the adjudication authority, second stage is the appellate authority. Appellate authority consists of the 4 parts. First part is the commissioner, first appellate authority, that means either is a joint commissioner or additional commissioner appeal. Second would be the tribunal, third would be High Court, and fourth would be the Supreme Court. So if we see, the High Court and Supreme Court would be the both common in the writ proceeding as well as the statutory proceedings. But when they act under the writ proceeding, their powers are different, and when they act under this statutory provisions, their powers are different. And therefore, just I would like to first go on the part of the statutory on the writ portions. In writ portions, as we said, that there are two things. One is the High Court and second is the Supreme Court. We have seen that many times people, instead of directly going to the High Court, they go to the Supreme Court. And when they file the petition, then it will be under Article 32. So question arises that in which situation you can directly approach to the Supreme Court, because Supreme Court is the highest court of India. And you know that once the Supreme Court give verdicts, then it is binding to all the authorities across the India, because it's a law of land. So everyone wants to try that why should we waste time? Why should we waste money to go step by step? Let me go to the Supreme Court. So can we go to Supreme Court in every matter directly? The answer is no. You can go to Supreme Court under Article 32 for a limited purpose when there is a fundamental violation of the fundamental rights or infringement of the fundamental rights. And what is the fundamental rights? So it's a very huge definition, is a disputed thing from day one. But from the perspective of GST, when we say that when we, as being a citizen, we are permitted to do business. Article 300A says that we are we can save our property, we can use our own property. So in a case when our fundamental rights to do the business, to speak, to live, if it has been violated by any officers or by any authority, you can go to the Supreme Court. And when you knock the door of the Supreme Court under Article 32, it is an obligation upon the Supreme Court to save the freedom, to save the fundamental right of the citizen. And when they find that it has been violated, then definitely the Supreme Court can interfere and pass appropriate order. And I just give the best example of that in our GST litigations. If you just recollect that one recent provision was introduced under Rule 36 of CGST rules, where the credit was restricted, ITC credit was restricted to the person who availed the credit. It was earlier 20%, now it is a 10% of the eligible credit. In that situation, one of the assessee, they filed a petition directly in the Article 32 of the Supreme Court by way of the PIL, and by saying that you cannot withhold this credit to the extent of the supplier uploads their returns or upload their invoices under the GST portal. So no doubt the petition was filed. So in this I'm giving an example that in the which situation you can go to the Supreme Court. Second is regarding the High Court under Article 226. There is also wide power given to the High Court, and the issue arises under which situation you can approach to the High Court, because what the remedy available under the statute, and similarly the same remedy, for the same remedy you can approach to the High Court, and therefore the issue arises where you can approach to the High Court. And for that purposes, before we understand in which situation, this I want to explain. There are 5 types of the writs. So one is a writ of habeas corpus, second is a writ of mandamus, third is a writ of certiorari, fourth is a writ of prohibition, and fifth is a writ of quo warranto. So there are 5 types of writ. When you exercise extraordinary jurisdiction of the High Court, then you have to justify that I fall under any of these 5 categories. So what is the 5 types of category, and what is the meaning of this terminology when I talk about this fancy words like habeas corpus, mandamus, certiorari? So let's understand one by one this meaning. First is a writ of habeas corpus. Corpus means body, and habeas means to present. So when you go to the High Court by way of invoking writ of habeas corpus, that means we are seeking the plea from the High Court. It kindly allow X person to remain present before the court, and that is a habeas corpus. Under which situation we can invoke the habeas corpus, that is very important, and specifically in the nowadays this is a situations. You know that Director General of this indirect tax, that means DGGI, they call the persons, they issue the summons, they call the persons, they retain him for recording his statement for 1 day, 2 days, and many times in we have come across the situation 2-3 days. They keep the person in the custody, record the statement, and thereafter 3 or 4 days they show the arrest of that person, or 3 or 4 days the person will be released. Question arises that whether the authority can keep the person in this manner invariably. Answer is no. So that means it is considered as an illegal detention. Now if it is an illegal detention, then what is the law? Because many times we feel that now what is the remedy available to us? Because if we go to police station says sorry, we will not lodge the FIR because this is a public authority and he is interrogating him. Secondly, the officer doesn't show that person is arrested, or he doesn't show the legal custody of that person. In such situation, we can invoke the writ of habeas corpus, and we can go to High Court we can say that, okay, see, this person has been detained by so and so person illegally without authority of law, and we want that that person should be remain present or should be presented before the court. So when we ask that yes, DGGI has arrested or DGGI has taken that person into custody, and if you file the writ of habeas corpus, the court normally issues the notice and ask that person, ask that authority to come with that person, and then they take the appropriate actions. So this is a one type of writ of habeas corpus, and I just give the practical example of last week, where we have advised the client to go to High Court in the writ of habeas corpus. It is in case of the customs. Just I'm not disclosing name, but it is from the Rajkot. The custom department approached that residence of that person, took him with that officers, brought him in the Ahmedabad customs house, and thereafter keeping that person into his custody for 2 days. The person was then taken to Delhi under the narcotics drug department. Despite the fact that 8 days, neither the department has shown him arrested nor he has been released, and therefore the family member approached us and we asked them to go for writ of habeas corpus, because ultimately, if that person has committed some offense, no doubt authority has power to interrogate him, but that interrogation can be done after the arrest in the remand proceeding. But the authority has no power to keep the person without any authority of law and without showing the arrest. Because ultimately, if the person is taken into custody and without showing into paper anywhere that this person is in my custody, if something happened, who would be responsible? And therefore the writ of habeas corpus has been introduced. Second writ is a writ of mandamus. What is meaning of mandamus? Mandamus means command. So many times we come across the situations that this authorities does not act within the four corner of the law. When you know that we have availed the right credit, then also department come and says that no, you are wrongly availed the credit, you are not eligible, you have to debit this amount, and they issue a audit memo, audit report and everything. So in that situation, you can go to High Court, ask for the writ of mandamus. And what is why you go for seek a writ of mandamus? Because we want command. We want that High Court should direct this authority to what we have done, that is a correct thing. So like for example, many types of there are decisions of High Court and Supreme Court where it is very clear that we are either eligible for the credit, or what we have claimed exemption, we are eligible for exemption. Then also department deny for XYZ reason. And in that situation, you can definitely seek a writ of mandamus and ask the authority, please direct them to do this particular thing in a particular manner. And I give best example of that is a cross-examination or personal hearing. You know that while attachment of the bank account, many times they don't give you opportunity, or in the adjudication proceeding they don't grant you the personal hearing and pass ex parte order. Or many times it may happen that you have seek cross-examination of particular person, and without granting opportunity of cross-examination they pass the order. So this order is absolutely invalid, because violation of principle of natural justice, violation of not granting the hearing. In that case, you can approach to High Court, seek writ of mandamus and say that please go through this and direct the authority to do this thing in a particular manner. Third is the writ of certiorari. What is writ of certiorari? The writ of certiorari is that we want that let the High Court call the papers, examine it and pass appropriate order. So give an example of that show cause notice has been issued for particular reason, and the reason which has been mentioned, take example of very absolutely in a practical way, that whether credit is eligible or not. And you know that yes, I'm eligible for the credit and there are empty number of decisions, then also department denies and they issue the show cause notice. No doubt you can participate in the adjudication proceeding, and you know that a person who has issued the show cause notice is going to be adjudicated, he is going to pass order against us. You also know that if you go to the first appellate authority, being a department officer, chances seems to be less to get the result in your favor, and therefore you may try to invoke the extraordinary jurisdiction by saying that let go to High Court, seek writ of certiorari, and if the it click, then ultimately we don't need to pass through this entire system. And if he and many times we have come across a situation when High Court finds that yes, this is the notice has been issued without jurisdiction, without authority of law, and it is a well precedent in favor of the assessee, and this notice has been issued only to harass the people or harass this registered person or tax payable, then High Court call the paper and quash the so-called notice. So this is a writ of certiorari, and in High Court when we see the majority decisions, you see that in majority decisions normally a registered person seek or that assessee seek either writ of mandamus or writ of certiorari, because majority writs are lying under this mandamus or the certiorari. Fourth writ is a writ of prohibition. What is writ of prohibition? Now you know the prohibit means to stay, to ask the person not to do something. When you can invoke the writ of prohibition? So writ of prohibition normally invoke in a case when the bank guarantee has been taken and the department wants to try to encase the bank guarantee, or when the department wants to attach the bank guarantee, or they want to attach the stock property, or there are so many other reasons where you can you can seek for the writ of prohibition. So normally when you seek writ of prohibition, seek the some particular direction. Normally High Court looks into it and pass appropriate order. And I give again practical example our own cases where normally you know that in many cases SGST department and CGST department both carries on the investigation against the same assessee for the same type of transactions. Now you know that ultimately one authority should do investigation. Both authority can't do investigation for the same transaction for the same assessee, and therefore if such situation arises, we can go to High Court and ask the court to direct them either let CGST department do the investigation or SGST department do the investigation. It would not be permissible that both the authorities should do the investigation. In that situation, you can go for the writ of prohibition. Third is a writ of quo warranto. What this is a very exceptional writ. This writ normally is invoked when the person does not hold that position and it shows on public that yes, I'm a appropriate authority for this. And again in GST, because when from the perspective of the GST, just a given example that my DIR officer who has been empowered to do the investigation on the area of the customs, and DGGI has been empowered to do the investigation in respect of the indirect GST, that means includes indirect taxes like excise, service tax, and now the GST. If DRI initiate investigation for examining the transactions of GST, you can definitely invoke the writ of quo warranto and says that this authority does not have that power. And in that situation, yes, the High Court look into it and pass the appropriate order. So these are the five types of the writ. So in short, if we see the Article 32 for the Supreme Court and Article 226 is for the High Court. And when you go to High Court, you have to see that where I am fit into either of these five. If you know that yes, I fall under any of these five category, you can very well go to the High Court by invoking the writ of appropriate writ. And just I have mentioned about on which situation you can go for writ. Just where on the left side of the slide, if you can see, it is like when the person does not have jurisdiction, carry on the investigation, or suppose like when the circular has been issued beyond the provisions of the notification, because notification stipulates A, B, C, D condition, and circular has been issued beyond those condition, then yes, it is considered as a without jurisdiction. You can approach to the High Court for that. Where any rule has been passed, passed by the government is beyond the provision of the section. Based decision is the ocean freight. I will just will discuss that decision later on. So in that case also you can approach the High Court. Violation of principle of natural justice. When we talk about the natural justice, that means it comes the personal hearing. Two, when you file the reply has not been considered. Third is regarding when you have sought cross-examination has not been granted. So in that case also you can approach the High Court. Unconstitutional of statute, like you know that GST authority does not have any power to levy GST on alcohol which is used for human consumption. But if GST authority directly or indirectly to try to enter themselves into this jurisdiction, then definitely you can go to High Court. Similarly, infringement of fundamental rights and error of apparent on the face of the record, or there is a abuse of the discretionary power, in that case you can very well approach to the High Court. Now, what we normally face the problem when we approach to the High Court, we always see that our first problem would be always alternate remedy. So suppose if you challenge the show cause notice, the High Court would ask you why you come to High Court directly. There is an authority, why should you not approach the authority? So there is always a problem regarding the alternate remedy available to the petitioner. So issue arises, if the alternate remedy available to the petitioner, does it mean that High Court does not have power, or petitioner cannot invoke the extraordinary jurisdiction? The answer is no. It does not mean that you cannot go to High Court. You can very well go to High Court. But what you have to show, you have to show, as we discuss about this 5 point, you have to show that I fall any one of these. No doubt there is a efficacious, there is a remedy available with us, but that remedy is not efficacious remedy to us, and therefore we have come to the High Court. And for that purposes, there are various precedents on this issue, and those precedents are on both sides. Some of the precedents are on the petitioner side, and some of the precedents are on the department side. And thus I try to take some decisions how the normally courts react in a case when alternate remedy is available. So in the case of Maharashtra Chess Association, the Bombay High Court said that mere existence of alternate forum where the aggrieved party may secure relief does not create a legal bar on a High Court to exercise its jurisdiction. It is a factor to be taken into consideration by High Court among the several other factors. Similarly, in the case of Guwahati Carbon, the Supreme Court says that under Article 226 of the Constitution of India, the High Court has the vast power, like as the Supreme Court under Article 32. But such power can be exercised only in those cases where the statutory authority has not acted in accordance with the provision of the enactment in question, or in defiance of the fundamental principles of jurisprudence or judicial procedure, or has resorted to invoke the provisions which are repealed, or when an order has been passed in total violation of the principle of natural justice. So this is a decision. And last one is a Walpur Corporation. Just I'm skipping this their Gate Hotel, Walpur Corporation, where they says that where the petitioner fundamental right is affected, then you can definitely approach to the High Court. Similarly, in case of violation of principle of natural justice, and third is the impugned proceeding is a ultra virus. So either of these situations you can approach to the High Court. Next point is a very important point, and I'm sure that many times, like being professional person of chartered accountant or lawyer, this question arises in mind, that when every state has their own High Court, and every High Court has own discretion to pass appropriate order or decisions. So if particular decision is rendered by the particular High Court, whether that decision is binding to the other High Court, and particularly in a case when there is a central law. So this issue arises in the mind. And I give a practical example of, if you recollect, that under the service tax regime, there was an issue regarding eligibility of credit of commission paid to the commission agent. The Punjab Haryana High Court, in the case of Ambika, they say that it is considered as a sales promotion activity and assessee is entitled for the credit. Whereas Gujarat High Court, in the case of Kedila, they said no, you are not. It is not a sales promotion activity, and therefore you are not entitled for the credit. Now, what the situation arose out of because of these contradicting decisions? The assessee or registered persons who are located within the jurisdiction of High Court, they were not permitted to avail the credit, and so cause notices were issued. Now, if the same assessee has their branch or any other office in Punjab, the person was entitled for the credit. There was no dispute, and therefore the issue in subsequent matter, the issue arose before the Gujarat High Court. The petitioner in that case has tried to show the discrimination between the assessee, saying that in the central law, because of one High Court has given favorable verdict, the credit is permissible there. But because of that, Gujarat High Court held against it, we are not entitled for the credit, and it's a loss to us, and ultimately we have to pay the amount of tax on our outward supply by debiting from the cash ledger account. That's in that subsequent decision, The Gujarat High Court said that sorry, ultimately every High Court has their own discretion to decide that matter. In our case, earlier matter, Gujarat High Court already decided against you, and as a judicial discipline, I am bound by the Gujarat High Court decision, and therefore, irrespective of the situation, I am going to take the same view. Now, this is a situation. So, even though it is a central law, if our jurisdictional High Court has decided the point, whether favorable or against, all the assessees and the officers located in that jurisdiction are bound by that decisions. Third question here arises: what is the situation in a case where the person is not located either of the state but located in the third state? Take an example of Delhi. That person is of Delhi. Now in that case, whether he is entitled for the credit or not. So the lucky point is that for Delhi people, that they can either go with the Gujarat High Court decision or the Punjab Haryana High Court decision. Now what the department is going to do, department is always going to follow the Gujarat High Court decision, whereas assessee is going to follow the Punjab Haryana High Court decision. So unless and until that jurisdictional High Court decides that issue, that till time assessee and assessing officer are free to follow any of the decisions. And that is the whole reason that many times the one state does not take any step, and second step take appropriate action for denial of the credit or to follow the favorable decisions. Now in that case, if the particular state later on decides that ultimately yes, they are assessee are bound by that decision, but what the third state is going to do that? So third state, that third state is again free to decide any of the point, whether they decide that okay, Punjab Haryana High Court is good law and therefore I am going to follow Punjab Haryana High Court, or secondly, yes, I am ultimately Gujarat High Court hold proper law and therefore I am going to follow the Gujarat High Court decision. So that is the whole reason in a central law, when the different high courts are there and different high court gives the different verdicts, that time it will be very difficult for the taxpayers to which law should be followed. And therefore many times in such situation, board come with that own circular that what they should do that. And that there is a one Supreme Court decision in the case of Kusum Ingots and Alloys Limited. The Supreme Court has come, it is a very good decision on the judicial discipline and on the point of the jurisdiction. So here they say that when any high court has given any particular verdict and there is no any verdict given by any other high court, then in case of the central law, that decision is binding to all the assessees and officers, even though those are not located within that jurisdiction of that high court. So the conclusion is this: if particular high court has given decision whether in favor or against, and there is no any other decision of any other high court, then all the taxpayers, registered persons, assessees are bound by that decisions. Now one last issue on this writ points regarding maintainability of the writ petition when the statutory time limit is over. So you know that normally high court, no doubt under Article 226, has a wide power. When we talk about the wide power, does not mean that what cannot be done directly, it can be done indirectly. Meaning thereby that if the law has not permitted to do statutory authority to particular thing, the High Court cannot do the same thing under Article 226. So take an example. I require to file the refund claim within 2 years from the date of payment in terms of section 54. Now I have not filed the refund claim within a period of 2 years. You know that statutory authority does not allow you to file the refund claim after 2 years, because they say that it is a barred by limitation. We don't have power to condone the delay, and therefore the petition, this refund application cannot be entertained. Now the issue arises whether High Court can do it. Answer is no. What cannot be done by the statutory authority, it cannot be done by the High Court under Article 226. But there is an exceptional case when High Court finds that yes, this is the particular thing is done with the assessee is absolutely gross injustice to that assessee, then yes, High Court can invoke the Article 226 but it is in an exceptional, in a sparing situation. You have to show that it is an absolutely gross injustice with me. And in that context, just I refer to one decision of Gujarat High Court. It is a larger bench decision of Gujarat High Court in the case of Panoli Intermediates Private Limited, where it is in the context of the Central Excise Act, where the appeal is required to be filed within a period of 60 days. And if the appeal is not filed within 60 days, the Commissioner Appeal has power to condone the delay, but that is not beyond the period of 30 days. In that case, the appeal was filed after a huge delay. The authority did not entertain the matter, and therefore the writ petition was filed, and since there was a conflicting decision, the matter was referred to the larger bench. The larger bench says that here, if you see the case on merit, yes, it is absolutely in favor to the petitioner, but the petitioner could not file the appeal within time limit because of the XYZ reason, and that reason was absolutely in an unexceptional case, and therefore it is a fit case to entertain the petition. And what the High Court did in that matter, they know that the Commission Appeal does not have power to condone the delay, and therefore High Court themselves decided this matter on merit and did the justice with the assessee. So here also the High Court said in the one of the paragraph, just it is in inverted comma, I read that portion extract. It is not possible to observe that in cases where the limitation period of preferring appeal or further period of condonation is over, the High Court will have no jurisdiction under Article 226 of the Constitution. But the exercise of such power has to be exceptional cases where gross injustice is satisfactorily demonstrated. Otherwise, in normal circumstances, the High Court would give appropriate weightage to the statutory provisions, because the things which cannot be done directly as per the statute cannot be permitted to be done indirectly in the writ jurisdiction, unless a grave and strong case is made out before the High Court that non-interference to the order under challenge would result in a gross injustice to the party suffering the order. So this is a quote, and therefore I say that yes, we have to be very strict in the compliance, and we have to strictly follow the time limit, adhere to the time limit. Otherwise, yes, we are going to invite the race for non-admissibility of the appropriate writ before the court. So this is the writ before the Supreme Court and before the High Court. And just now I'm going to the statutory provisions. As we discussed, there are total 6 statutory authorities under this GST. One is the advance ruling, second is the appellate authority, third is the revisionary authority, fourth is the appellate tribunal, fifth is a High Court, and sixth is a Supreme Court. There are different provisions and corresponding rules. This corresponding rule provide regarding the procedures, how the procedures have to be followed. First, we go on the advance ruling side. No doubt, what is the intent of the government? That seems to be not going to be fulfilled by introduction of this authority. Everyone expected, when the law came, everyone expected that ultimately litigation is going to be reduced. But on the contrary, by introduction of this advance ruling, it appears that now that litigation is going to be increased. And what is the reason for not having the fruitful result? We know that because of the constitution of the bench. The constitution normally in advance ruling, the joint commissioner sits, and where this officer have never worked independently, they don't have experience about the judicial, and therefore chances seems to be very less to get the balanced decisions. And nowadays we now stop giving advising. We started giving advising to our client not to approach to the advance ruling authority, because the chances seems to be high to get a perverse order, to get a negative order. But whatever the facts may be, now what is the advance ruling? And no doubt everyone knows about it, but just I try to cover up this issue fast. In advance ruling authority, you cannot approach for each and every type of issues. Under section 97, the statute has provided the 7 categories under which you can approach the advance ruling authority. So if you have question which falls under any of these 7 categories, you can very well approach to the advance ruling authority. Which are these 7 categories? First is a classification issue. So whether your particular product classified under X or Y, for that purpose you can approach the advance ruling authority. And now latest example I can give, sanitizer. which is the highest used product nowadays. So now DGGI, based on the classification or letter received from the World Customs Organization, they interpreted that sanitizer is classifiable under Chapter 38, and therefore they sent notice to all the principal commissioner, chief commissioners, and all the jurisdictional officer to ascertain their assesses within that jurisdiction and to identify whether they classify under Chapter 38 or other chapter. Because many assessee, they consider this sanitizer is a medicament item and classified in under Chapter 30. But the department now consider it as a either cosmetic or as the product, and therefore classifiable under 34 or 38. Now, if the product is classified under the 30, then it is then the rate of tax is 12%, and if it is classifiable under 34 or 38, then rate of tax is 18%. So this dispute is going. If that is so, you can definitely, if you have not received any intimation from the department, then you can very well approach to the Advanced Ruling Authority to know that where my product would classify. Second is the applicability of notification, whether my product fall under X category or X notification or Y notification, whether I am entitled for benefit of exemption notification or not. You can very well approach the Advanced Ruling Authority. Third is regarding determination of time and value of the supply. Fourth is the admissibility of the ITC. So when we talk about the ITC has been defined in the law. That means it is either the tax paid on CGST, SGST, IGST, or Indian Territory tax paid, that is considered as a ITC. And therefore, if any dispute regarding the transitional credit or in respect of the earlier law, SANVAT or VAT, you cannot approach to Advanced Ruling Authority. And therefore, there are decisions on this point where a person approached to Advanced Ruling Authority whether am I entitled to avail the credit under transition or not. The Advanced Ruling Authority says that no, it is not admissible because they don't have a jurisdiction for the reason that you can come whether for section 16 or 70, but you cannot come for any other provision because whether am I eligible or not, for that you cannot come. Next is a determination of liability to pay. Now, other one is a registration requirement of the applicant. This is also very important point, that what is meaning of registration required. So you are unregistered, you can very well approach to Advanced Ruling Authority to understand whether am I required to register or not. But there is one decision in the case of Manekji Copper Education Trust, where the issue arose that the person was registered and they used to pay tax under royalty on forward charges. Later on, law was amended and they said the royalty was required to be, the tax was required to be paid under reverse charge mechanism, and therefore that person does not have any taxable supply. The person approached to Advanced Ruling Authority to understand whether the registration which I have, should I continue with that registration or I require to surrender my registration. The Advanced Ruling Authority says that you can come to this authority to seek whether am I required to register or not, but you cannot come for the purpose whether my registration, the registration which has been granted to me is required to be surrendered or I require to keep that registration with me. So Advanced Ruling did not entertain that application. And last is whether any particular thing done by the applicant with respect to any goods or services or both amount to or result in a supply of goods or services or both within the meaning of the term. So whether it is supply or not. So in those 7 categories, you can approach to the Advanced Ruling Authority. Question arises under which question I cannot. So just I explained you 2 things regarding registration, regarding transitional credit. Third is regarding the place of supply, whether my particular supply, which is the place of supply, X state, Y state, for that you cannot approach to Advanced Ruling Authority. Similarly, in a case where you are registered in a particular one state and the transaction which you have undertaken where the liability arises under Y state, for that also you cannot approach to the Advanced Ruling Authority. So where you approach to Advanced Ruling Authority, if that answer of the question falls under that jurisdiction, then you can approach to Advanced Ruling Authority. Otherwise, does not fall under the jurisdiction, and Advanced Ruling Authority would dismiss your application. What is the procedure? Just who have practiced who have applied for Advanced Ruling know about this procedure. But let me explain this procedure. Normally, the application is required to be filed in application form called ARA1. When you file application, you have to make 2 applications. One is for central and second is the state, and therefore you have to pay fees of ₹5,000 each for both the application for central as well as state. Once the application is filed, then there are two stages. One is for admission and second is for final hearing. In admission, what normally Advanced Ruling Authority does, they just see that whether that question which you have proposed in the application, it falls under any of the 7 categories or not. If it falls under any 7 categories, then Advanced Ruling Authority, they admit that application, whether authorized person appears or does not appear. So in admission stage, the jurisdiction of the advanced ruling is very limited. They just don't go beyond this point. It just they see that whether fees has been paid, to whether they have jurisdiction or not, and if both the conditions are complied with, they go ahead with that. Once the matter is admitted, then hearing is granted for final hearing, for final disposal, and the matter will be disposed of finally. Law provides that application is required to be disposed of within 90 days from the date of the application, but it is not happen. So one question would definitely in mind, because if you read the provisions, there is no any discretion given to the Advanced Ruling Authority to pass order beyond the period of 90 days. If you just we go further, I'll just draw the attention of yours to show that in wherever it is possible, wherever the legislature wanted to extend the time limit, they say that within 90 days so far as possible, or within 1 year in so far as it is possible. But when you read the provisions of the Advanced Ruling Authority, these words are missing, and therefore according to me this 90 days is a stricto terms, and if the order is not passed within 90 days, then it is considered as a null and void. So once the order is passed, once the hearing took place, then order is passed. If both the members, that means CGST member and SGST member both agrees, then yes, they pass the final order. If there is a difference opinion between these two members, then they don't pass the order. They directly refer this matter to the appellate authority for advanced ruling. So here now normally in till date what we have seen, when there is a difference opinion, it would be the matter will be referred to the third member or third judge, and after pronouncement of the decision by the third member or third judge, based on the majority, the decision is passed. But that is not in the case of the Advanced Ruling Authority. If there is any error, yes, error can be rectified, but that error can be rectified within a period of 6 months. So now there is also we need to look into the provision of the appellate authority for advanced ruling as well as the national appellate authority. So in a case where advanced ruling authority has passed order against you, or there is a difference of opinion, you can very well approach to the appellate authority for advanced ruling. Now when the appeal is required to be filed, so whether it is required to be filed by the department or by you, the time limit is given 30 days to file an appeal. So in that case, they mentioned that 30 days is a time limit where the appeal is required to be filed before the appellate authority. If the appeal is not filed within 30 days, the 30 days time more is given to the assessee to file the appeal. But if the appeal is not filed within the 30 days, then then the appellate authority for advanced ruling does not have power to condone the delay. Next is that ultimately this application is required to be filed in the ARA2 in case if it is filed by the assessee. But if the department files this application, then it is required to be filed in ARA3. What is the fees? As we discussed in the if application is filed before advanced ruling, the prescribed fee is 5,000. Whereas if you file appeal before the appellate authority, then the fee is 10,000 rupees. Here also the order is required to be passed within a period of 90 days. Now one more factor, if there is a difference of opinion again between the two appellate authority, then what is the outcome? Normally outcome is that when there is a difference of opinion, the matter is returned to the assessee back. There would not be any decisions. It is considered that there is no decision and therefore no any answer is given to your question. It is really good for according to me, because in case of a difference of opinion, or in case of there is an order against you, advisable that let it be difference of opinion and there is no answer. So in case of this situation, when there is a difference of opinion, the matter can be referred to the National Appellate Authority. No doubt this authority has not been constituted till date, but the jurisdiction of this authority is very limited. You cannot approach to the National Appellate Authority if the Appellate Authority for Advanced Ruling has given the decision against you. You can approach to National Appellate Authority only in a case when there is a divergent views of two members of the Appellate Authority for Advanced Ruling, or there are divergent ruling by the two different Advanced Ruling Authority. In those circumstances, you can approach the National Appellate Authority. So once order is passed by the Appellate Authority, whether favorable or against you, you have no remedy under the statutory provisions. Does not mean that you cannot challenge that order. You can very well challenge that order, but that order will be challenged before the High Court under Article 226. And that situation, you can say that I don't have any remedy, and therefore this is the under Article 226. I can I can approach before the High Court. Now, when we talk about the National Appellate Authority, no jurisdiction, limited jurisdiction. Only in the case of divergent view, the person can approach. Here, the time limit is for 30 days again to file the appeal. And when the department wants to approach before the National Appellate Authority, instead of 30 days, the time limit of 90 days have been given. If there is a delay, yes, the either department or the assessee can go to the National Appellate Authority, but that period should be limited to 90 days, 30 days, not beyond it. And once these decisions are given either by the Advanced Ruling Authority or Appellate Authority, it is binding to that particular assessee as well as the jurisdictional officer. But if the order is given by the National Appellate Authority, then that decision is not binding only to that person, but is binding to the applicant and all the distinct persons having the same PAN number. So if a particular person approach before the National Appellate Authority, then if that person has a branch or any other offices across different states, then that decision is binding to all these assessee as well as the assessing officer. Kindly note that if this if the assessee has furnished any wrong information or they obtain this verdict by putting the wrong documents or false document, then this ruling would be considered as a void ab initio, and it there will be some consequences against this situation. So it is always advisable that what the information you place before the Advanced Ruling Authority, kindly check two times that any wrong information has been furnished, whether advertently or inadvertently. There are some verdicts on this, but let me discuss only on the one issue regarding Hindustan Coca-Cola beverages. Very fantastic, because you know that under GST, if you have two different offices in two different states, it is considered as a distinct person. Now, in this Hindustan Coca-Cola, for the assessee approach to Karnataka Advanced Ruling Authority to know the classification of one of the product being manufactured by them, they want to know whether it is considered as a soft beverages or it is a considered aerated water. So when this matter was heard, the authority come to know that the same assessee also filed the Advanced Ruling application before the Gujarat Advanced Ruling Authority. Then this Bangalore Advanced Ruling Authority rejected their application on the premise that you have suppressed this information, that you already filed similar application before the Gujarat Appellate Authority, and therefore we don't have a jurisdiction on this matter. Now, question here arises whether Karnataka Advanced Ruling Authority is really correct to say that ultimately, since you have already filed one application before the before other jurisdiction, you cannot file here. So according to me, answer is no. For the reason that when law itself contemplates or law itself demonstrates that if you are registered under different state or you have branch in the different place, then you have to take the separate register. It is considered a distinct person. So unless and until the provision specifies this situation, you cannot reject this application. And it appears that I'm not sure about what is the outcome, whether that order was challenged or not later on, but it appears that there is a wrong decisions. Now we travel further. We now go towards the adjudication side. So when we go for adjudication side, you know that adjudication, that means one, what we deal with our range officers, and what we deal with that also are adjudication authorities. Similarly, when the notice is issued and that required to be adjudicated, that is also adjudication authorities. Under this GST, like as a service tax and excise, whatever the amount or whatever the disclosure you made in your return, then it is considered as a self-assessment. So there is no requirement to carry out the separate assessment like under the VAT, because under VAT, even though after filing the return, the officers will call you for the regular assessment. That is not the case in the GST. They have adopted the procedure like under the excise and service tax, whatever the return you file, the data declared in the return would be considered as a self-assessed data made by the assessee. So unless until they have the officer has a doubt, they can it would be accepted this document. Second is regarding the provisional assessment, and I may say here that we have hardly adopted this procedure. So in a case, I may say that in a case where the issue is regarding value or rate of tax, instead of going to advanced ruling authority, it is advisable to go for provisional assessment. And why I'm saying that go for provisional assessment, because you have a statutory remedies available under the law. You get at least 4 authorities to give answer to your queries, and you know that late assessing officer may be perverse, but you can get at least, you can take hope from the appellate authority, and those would be the higher rank of from the joint commissioner level. So one, in the case of the when you can approach for the provisional assessment, when the assessee has a doubt about value or rate of tax, then for determination of value and rate of tax, you can go for provisional assessment. So when you want to go for provisional assessment, you can make an application under GST assessment 01 form seeking provisional assessment. Once you make an application, then officer will call you for submission of documents or required documents, and that notice will be issued under GST assessment 2 form. Once you file the reply or documents are required to be submitted within a period of 30 days from the date of issuance of this notice. Once you furnish this information, then within the 90 days from the date of the application, the officer would pass the provisional assessment order. If the amount declared in the provisional assessment order match with your data, with your amount, the department will not ask any bond in terms of the surety or the security. But if there is a differ, the amount differs, and the provisional amount declared in the provisional assessment is more than the amount declared by you, then the department will ask to submit a bond with surety and with security as deemed fit by the officers. And once you submit this bond and amount, then the assessing officer will take your matter for final assessment. Normally there is a time limit. So in case of if the additional commissioner or joint commissioner is going to be decided this matter, then within a period of 6 months, they would pass the final assessment. No doubt, they have a discretion power. They can seek extension for further 6 months, but not beyond the period of 12 months from the date of the applications. In case commissioner is going to decide your issue, then they have power up to 4 years where that assessment can be done. Once the final assessment is passed, and if it is as per what the assessee sought, then there would not be any demand. But if after passing the final assessment order there is a demand, then that amount is required to be paid along with the interest. And in case the excess amount has been paid at the time of provisional assessment, then the assessee required to make an application for claiming the refund, and the department is bound to return this amount within a period of 60 days from the date of the application. In case the amount is not refunded within the period of 60 days, then interest period will start from 61st day. So from 61st day till the date of payment, the assessee will be entitled for the refund interest. Once this entire procedure is done, then whatever the bond or surety and in terms of surety and security has been furnished, that will be returned to the assessee. So this is the procedure for the provisional assessment. And I may again reiterate this point that in case of the value or rate of tax, advisable to approach for the provisional assessment. And I give you best example in the sanitizer only. That suppose you know that I don't want to go for litigation unnecessary, or if I go for litigation there may be liability of interest also, and you want to pay at 18% for XYZ reason, and if you deposit this amount in the protest, then I'm not sure when department is going to issue the so cause notice, because there is no concept like as a protest under the GST. So even you deposit this amount of protest, department may not initiate any action, and then we advise like you that you go for the refund. When you file the refund application, they says that ultimately since there is no provisional assessment or there is no proper mechanisms, therefore we are not going to issue any so cause notice. Now in that case you need to go to High Court to overcome of that dispute. If you have applied for provisional assessment, then this entire litigation would initiate. So that suppose even though you pay the amount 18% now, but in future in the litigation procedure, if the rate of tax decides that yes it is at 12%, you are entitled for the refund along with the interest. So this is one situation in a case where you this is a benefit where whether you go for provisional assessment or not. Next one more assessment is a scrutiny of the returns. So you file the returns and department initiate proceeding for scrutiny of your return. And normally it is going to happen in a case where department has some information with them that the amount declared by the assessee is not correct. So if that is so, then assessing officer will send you the notice, ask you to submit the documents. If you submit the documents and assessing officer satisfied, then they close the issue. But if the assessing officer does not satisfy, then they have three options available with them. First option, they initiate audit. Second option, they search your premises. And third option is they issue the notice either under section 74 or 75, 73 or 74. So either of these action they can initiate. And therefore, it is always advisable to assist to the assessing officer and try to resolve the issue, because they can adopt any of these three proceedings, and in that situation there may be the consequences. Next would be the assessment for non-filer of the returns. So one of the situation that you have a registration but you have not filed the return, and assessing officer has some information, or they would like to know that whether you have any taxable income or taxable supply or not, and for that purposes they would send you the notice, ask you to submit the information. If you have not submitted any information, then they carry out the assessment as based on the base judgment. They whatever the documents available with them, based on that they carry out the assessment. And once the assessment is done, simultaneously they also send the summary order in the GST DRC 07. But this procedure required to be done, that means assessment and summary order, the time limit is of 5 years from the date specified under section 44 for furnishing of the annual return for the financial year to which this assessment is going to be made. So there is a time limit of 5 years. After 5 years, they cannot carry out under any proceeding. Kindly note, under this entire GST, the maximum time limit for initiate any action is of 5 years. And 5 years again, it starts everywhere from the date of from due date of filing of the annual return of particular that period. And no doubt time comes, I'll just explain you when the time limit is not provided, then what is the reasonable time limit. The reasonable time limit according to me would be considered as 5 years from date of this due date of this annual return, because entire law does not go beyond the 5 years. So that is one. And once this order is passed for non-filers and the order is served upon you, within 30 days from the date of the service of the order, you can submit the data. Once you submit the data, then the assessment order which has been passed by them would be washed and set aside. And based on the data submitted by you, the department will carry out the assessment. Next is the assessment for unregistered person. So the person either is unregistered or was taken registration but it was cancelled. In that situation, and the officer has some doubt about the some taxable supply, In that case, they can go for the assessment. If you submit the data, fine. If the data is not submitted, again the assessing officer can do the assessment based on the documents available with them. And again the same procedure for like as we discussed for non-filer, that if the data is not submitted, and if not submitted, they carry out the assessment, and within the 30 days from the date of assessment you submit the data, then the earlier order will be quashed and set aside. This summary assessment is like a absolute different assessment. This is normally happen in a case where they carry out the search, or during the course of transit they found something, and that case they know that yes, it is a loss to the revenue, and if they go for the regular assessment or they go for the other assessment as we discussed, in that situation with the prior approval they go for the summary assessment. And the main intention for the summary assessment is to protect the revenue. So if they know that this particular person is liable for tax, they demand, they go for summary assessment against that particular person. But if that particular person is not available, in that case, the person from whom the goods were seized or from the goods goods were purchased from them, they can ask for the they can go for the summary assessment. So this is the provisions in respect of the assessment. Next procedure is regarding the adjudication proceedings. There are two provisions. There are section 73 and 74 for issuance of the demand notice. We have seen under the service tax there was only one provision, section 73, where it covers both the angles in case the demand is within normal time and in the case when the demand is beyond the period of the normal period, that means the larger period. So in GST they have bifurcated the two set. One is in the case of the normal period, second is in the case of the case where there is a mala fide intention, suppression of facts, or willful misstatement for intention to evade the tax or refund was granted. So in case of the, let we first discuss about the section 73. This proceeding can be initiated for normal period and again within the time which has been prescribed. Here under section 73, the time limit is completely different, like under earlier different provisions. What it says that when the notice is required to be issued, the time limit for issuance of the notice is based on the time on which the order is required to be passed. So meaning thereby that under the 73, they can go up to the 3 years for demanding the tax. So here normal period is a 3 years. Now 3 years would be considered from the order is required to be passed within 3 years from due date of furnishing of the annual return for the financial year for which the SOCOS was required to be, for which the SOCOS was issued. Now the order is required to be passed within 3 years. So for that, notice is required to be issued 3 months prior to issuance of this order. Let me explain you in an example wise. That is the next slide. So for the financial 2017 and 18, you know that due date for filing annual return was 31st January 2020. Now in terms of 73, the order was required to be passed within 3 years from the date of filing of the annual return. So due date from the filing of the annual return. Now for 2017-18, the due date was 31st January 2020, and therefore the return was therefore the order was required to be passed on or before 31st January 2023. Now notice, when the notice was required to be issued, it says that 3 months prior to issuance of the order under this provision. So 31st January 2023 is a date of order, and therefore the 3 months prior to, that means 31st October 2022 is considered as a due date for issuance of the SOCOS notice. So notice is required to be issued on or before 31st October 2022. If the notice is issued after 31st October 2022, it is considered as an invalid notice. So kindly note, under the 73 and 74, in both the cases, there is a different way the time limit has been provided. If the notice is issued under section 73, if you pay this amount of tax and interest before passing the final order, then there is no penalty. But if you await for the order, then there is a 10% of the tax amount which is leviable as a penalty. So once the order is passed, then 10% penalty is required to be paid in the case of the 73. And again, it is for the normal period. Normal period means 3 years. There is one more provisions given under 73, as we discussed under self-assessment, that what the data you require declare, that is considered self-assessed data. And if you the tax which is required to be paid as per the self-assessment, that has to be paid within the due date as prescribed under the law. But if you have not paid this amount within the due date, then they says that within 30 days you have to pay this amount, then there is no penalty. But if you don't pay this amount of tax within a period of 30 days, then there is a penalty which is equal to 10% of your tax amount. So kindly note here that if you don't pay the tax within the 30 days, then and the notice is issued under 73, then there is no option available with you, but the department will ask you to pay the penalty which is equal to 10% of your tax amount. Now if you go under section 74, there is a similar provisions, but only the difference is that here there is a demand is for larger period. Larger period is means 5 years. And second condition is that the amount of tax is not paid on account of fraud, collusion, willful misstatement, or suppression of fact with intent to evade payment of tax. What is we all know that what is meaning of fraud, collusion, and willful misstatement. So it is an obligation upon the department to prove that yes, there was the assessee did not pay this tax because of the fraud. Burden lies upon the department. It does not lie upon us to prove that who committed the fraud. Here, when the notice is issued under section 74, as we discuss about the 5 years, again it is the same provision as applicable for 73. But here there are different provision for the penalty. What is penalty? In terms of the penalty, it says that if you pay the tax, interest, and penalty equal to 15% of the tax amount before issuance of the so-called notice, then there is the balance amount of penalty will be waived. So when the department start in issuance of the summons, initiate the investigation, and you know that there is the liability of tax, and you know that yes, department is going to allege for that larger period, then if you pay this tax, interest, and 15% of the tax liability, then no notice will be issued. Similarly, in case notice has been issued, but if you pay the amount within 30 days from the date of issuance of this notice, that means tax and interest and penalty that is equal to 25% of the tax is paid within 30 days from the date of issuance of the so-called notice, then there would not be penalty for the balance amount. And in case you don't deposit amount even within the even during the course of the so-called notice, then the adjudication authority, while confirming the demand, they impose the penalty which is equal to 100% of the tax amount. And if you pay this tax amount, interest and penalty which is equal to 50% within the 30 days, then the balance amount of penalty will be waived. So this is the main provision. If you see, it is a more or less same provision like it was under erstwhile service tax. There is no any difference. One more important aspect here, that what to avoid the litigations and to make these provisions very simplified, they have prescribed some procedures here. What they say that even though when larger period has been invoked and you don't deposit the amount of tax, interest, and penalty before issuance of the so-called notice, then and the so-called notice issued later on, then you would not get benefit from the prosecution which is going to be invoked under this article under section 132 of the CGST Act. So if you deposit this amount before so-called, there is no prosecution. But once you deposit the amount after so-called notice, then there is a prosecution, and therefore it is always, for being a professional person, we should advise if to the client, if you would like to deposit this amount later on, it is advisable to deposit this amount before issuance of so-called notice, so that ultimately there would not be any prosecution, or there would not be any risk of prosecution. Second, they also given meaning of the separation. What is meaning of separation? Because when they want to invoke the larger period, they say the separation means what is required to be declared under the return, statement, report, or any other document which has not been submitted or which has not been declared under this return, statement, or report, then it is considered as a suppression of the facts. So there is a suppression, and that is the main reason for invocation of the larger period. One aspect we need to look into again here: merely suppression of facts does not mean that department can issue the so-called notice by invoking larger period. By proving the suppression, the department has to prove further that yes, there is an intention to evade the tax. So suppose if I file the return, by mistake I filled up wrong data. So yes, there is a suppression, but does not mean that is an intention to evade the tax. So department, when they want to invoke larger period, they have to prove two things. One is the suppression, and second is the intention. And there are empty number of decisions on this line of the Supreme Court, like from the day of HMM Limited to Tamil Nadu Housing, Make Money Organics. There are so many decisions on this issue that merely suppression does not mean that officer is power to issue the so-called notice by invoking larger period. They have to prove further that yes, there was an intention to evade the tax. One more benefit is given, that if the assessee has paid this amount of tax, interest and penalty either in the section 73 or 74, then there would not be any proceeding initiated against all other co-appellant or co-notices. So what is to happen earlier, that main party used to pay tax under the service tax and excise. Co-notice never deposited penalty, and therefore the proceedings against the co-notice and co-appellant was always going on. To overcome of that situation, the law has specified that in these circumstances, if the main assessee deposited the amount of tax, interest and penalty, and the proceeding has been concluded against the main assessee, then there is no requirement to continue with the same procedure against the co-noticee or the co-appellant. So there is one good provision under the GST. Now there is an adjudication that is against under the section 75, and I would say that this is one of the best provision introduced under GST to reduce the litigation, to give obligation upon the authority how the order is to be passed. So let me discuss with this. We have seen that for issuance of so-called notice in the 73 and 74, as well as to pass an order, there is a time limit provided. So if High Court, Tribunal or any other authority has stayed the proceeding for issuance of the notice or passing the order, then those time limit will be excluded while completing the period of 3 years or the 5 years. Second provision is that in case notice has been issued under section 74, meaning thereby larger period has been invoked, but later on it was found either by your adjudication authority or appellate authority, tribunal, high court or Supreme Court, that there is no requirement to issue the larger period, then normally what is going to happen, that if notice is issued under 74, larger period is not invocable, then that notice is considered void ab initio. There is the proceeding is dropped, and therefore even no notice was issued under 73, and therefore demand cannot be even made within the normal period. To overcome of that, the authority says that the law itself says that if the so-called notice is considered, if it is considered there was no mala fide intention or larger period cannot be invoked, does not mean that the proceeding is dropped. It will be considered the proceeding has been initiated under section 73. So there the demand can be made within the period of a normal period. One more obligation is given to the authority, that in the remand proceeding, if the order has been remanded by the proceeding has been remanded by the appellate authority or the High Court or Supreme Court, in that situation the order is required to be passed within a period of 2 years from the date of the remand proceeding. Adjournment should not be given more than 3 times by the adjudication authority. Third, next step is that ultimately proper officer has to set out the facts and basis on which the order is passed in the order. It is also given obligation upon the authority that order should be passed on those points which has been alleged in the so-called notice. So if there are 4 allegations in the so-called notice, order is required to be passed within that 4 allegations. The adjudication authority cannot go on the 5th point. and it happened in the past that so cause was issued on 4 point, order is passed in the 5th point, and therefore we always say that the order is beyond the scope of so cause notice, and then ultimately appellate authority caused that order. To overcome this provision has been invoked. Interest is a consequence liability. So even though so cause notice or order whether specifies or not, once there is a liability of the tax, then interest is required to be paid. There is no any exemption, or there is no any relief to the assessee by saying that since the amount is not since the interest has not been quantified or interest has not been specified in the order, that means I'm not liable for interest. The answer is no, you required to pay because of the provisions. One more important aspect is that the law given obligation upon the officer to pass an order within a period of 3 years or 5 years, as we have seen in the 73 and 74. If the order is not passed within the 3 or 5 years, the law says that the proceeding is considered deemed it is a concluded. So if there is a delay in passing the order after 3 or 5 years, it can be considered as there is no proceeding, and this is one of the best procedure, I would say that. Then no penalty under no penalty under the other provision. If penalty has been imposed either in the section 73 or 74, then no any penalty can be imposed under any of the provisions. So like for non-filing the returns, late payment of tax, so there would not be any penalty. Once you deposit 10% of 73, issue is concluded, no any other penalty. And last point is the how the recovery can be done under section 78, because this provision has been provided under section 78. It says that normally once the order is passed, then within the 3 years from the date of service of the order, the proceeding would be initiated. If officer finds that 3 months, sorry, not 3 years but 3 months, but if the officer finds that the 3 month is the not 3 month, if we wait for the 3 month, it prejudices to the revenue. To protect the revenue, we require to recover this amount beyond the period of 3 months. Then yes, the power is given, they can do recovery within a period before the period of 3 years, but they have to give reasons why they want to recover this amount before the period of 3 months. Because why the period of 3 months is provided, for the reason there is a appellate proceeding, there is a procedure where the time limit is given for the 90 days for filing the appeal, and therefore they say that normally the time limit for initiation of the recovery proceeding is 3 months. Next step is a tax collected but not paid to the government. Again here, when the so cause notice required to be issued, then they have to show that yes, the amount has been collected by the assessee but not deposited with the government. Here time limit has not been prescribed. So as I discussed with you, when no time limit has been prescribed, then it is considered as a 5 years would be the sufficient time for issuance of the so cause notice and passing the order. There is a opportunity is to be given to the assessee before the passing the order, and the order is required to be passed within a period of 1 year from the date of the issuance of the from the notice. And in case if this notice has been stayed or the proceeding has been stayed by the higher authority, then those period will be excluded while completing the period of 5 years or 1 year for passing the orders. And in this case, there is a one important aspect they have provided in section 76. They says that normally in which situation assessee collect the tax and does not deposit the government, because they know that in normally that there is no liability of the tax. So whatever the amount of tax we collected, it is an obligation upon us to deposit to the government, but because we know that this is not taxable and therefore the amount was not deposited. In that case, the law provides that the person who has borne the amount of tax, they can file refund claim by proving that just they borne this amount of the tax and therefore they are entitled for the refund. This provision was not there under the service tax, and so that is considered as a good provision for that. Now next step we go for the appeal and revisions. In case of these appeals, where the appeal can be filed, appeal can be in case once the order is passed by the adjudication authority, then appeal can be filed before the appellate authority. Here there are two types of appellate authority. If you know, under excise and service tax, if order is passed by the officer below the rank of the commissioner, then appeal would always lie before the commissioner appeal. And in case the order is passed by the commissioner, the first appeal would lie before the tribunal. But here they have borrowed the provisions from the VAT. It appears that in case the order is passed by the authority below the joint commissioner or additional commissioner, then first appeal would lie before the additional commissioner or joint commissioner appeal. And in case the order is passed by the Joint Commissioner or Additional Commissioner, then appeal would lie before the Commissioner Appeals. So this is the actually the authority before whom the appeal appeal would lie. In case if the appeal is passed, appeal is required to be filed by the assessee, then the time limit is 3 months to file an appeal. In case the appeal is required to be filed by the department, the time limit is given for 6 months from the date of the communication of the order. Here again the same, like as there was an earlier provision that in case the appeal is not filed within period of 3 months or 6 months, then yes, you can file appeal with condonation of delay application, but Commission Appeal does not have power to condone the delay beyond the period of 1 month. What is the requirement of the pre-deposit? Here the demand has been bifurcated in 2 parts: admitted liability and disputed liability. Whatever the admitted liability, that admitted liability is required to be deposited. Entire amount of admitted liability is required to be deposited, whether it is in form of tax, interest, or the fine, fee, or in any other form. And in case of the disputed liability, the 10% of tax is required to be deposited. So on deposit of 10% of tax, balance amount of tax, interest and penalty would be stayed. And this is a maximum amount of rupees 25 crores. One more important aspect while filing the appeal, and just kindly note this, because it is the obligation upon all of professional persons, that when you file an appeal, in terms of the procedure, you are required to annex certified copy of the impugned order. So which order is going to be challenged, that order is required to be certified, and that order is required to be annexed. If you have not annexed this certified copy of the order, then from the date of filing of the appeal, within 7 days, you can submit the certified copy of the order. The law provides, if you submit the certified copy of the order within 7 days from the date of filing of the appeal, then original date of filing of the appeal would be considered as a date of filing of the appeal. But if you fail to submit this certified copy of the order within a period of 7 days, and take an example, you submit this order appeal certified copy of the order once the appellate authority intimates you, that means after period of 30 days, the law provides that on the date when you submit the certified copy of the order, that date would be considered as a date of filing of the appeal. So what is going to happen? Suppose if you file this certified copy of the after 30 days, the appellate authority says that I don't have power to decide your matter because you have filed this appeal after period of 30 days, and therefore it is considered this appeal is considered a time bar. And therefore, just we have to be very careful that we should submit the certified copy of the order, or if you have not submitted certified within 7 days, we should submit this order. And I'm sure that this provision is going to be challenged before the higher forum, and someone would say that no, original date would be considered as a date of filing. But take as the case may be today, the provision says that the date on which you file the certified copy of the order after 7 days, then date of filing of the certified copy of the order would be considered as a date of filing of your appeal. Here also appellate authority can grant you maximum three adjournments. Again, one important aspect, that normally when you file appeal, you have to take the grounds which you have normally taken before the adjudication authority in the reply or written statements or written submissions. If you want to introduce new grounds in your appeal filed before the appellate authority, then you have to file separate application. You have to intimate to the authority that these are the grounds which we did not take up before the adjudication authority, and you also to justify why you could not take this ground before the adjudication authority. And therefore, we have to be very careful while drafting reply to the show cause notice or written submissions. We have to try to cover all the points. Even remotely, we find that this is a point we should cover up in the reply, so that ultimately we don't need to file this additional grounds while filing the appeal before the first appellate authority. Then, in case once this appeal is filed and additional ground application is filed, the appellate authority has power to either accept this additional ground or reject this reject this application of this additional ground. And after these proceedings, the appellate authority either modify the order, confirm the order, annul the decisions. But law specifies that appellate authority does not have power to remand the proceeding. So earlier there was an issue that in excise, yes, the commission appeal has power to remand the matter, but service tax, the first appellate authority does not have power to remand. So to overcome of that, they have specified that first appellate authority does not have power to remand the matter. They have to decide this issue, being a fact-finding authority. And in case of during the appellate proceeding, if the appellate authority finds that yes, there are some other recovery also, there are some other issues also, they can direct the adjudication authority to issue the super notice on particular time limit. And what is the time limit for finalizing this appeal? The law says that within a period of 1 year from the date of filing of the appeal, the order is required to be passed. Now here again, you just kindly note that wherever it is possible to do so for passing the order. So in advance ruling, these words were missing, and therefore I said that in advance ruling, while discussing the advance ruling authority, that yes, 90 days seems to be the stricter terms. They cannot do that. Now revisional authority, because of this time limit, I just go fast on this revisional authority. If the authority by their own motion or the own motion or by the commissioner or by any subordinate officer, they find that order passed by the lower authority is not in accordance with the law, or it has been contradictory to the observation made by the comptroller and the auditor general, or it is a prejudicial to the revenue interest of the revenue, then they can invite the revision proceedings. Here they say that once the revision proceeding has been initiated, it is considered or it is deemed that the operation of the impugn order has been stayed, meaning thereby that if you are entitled for refund, you will not get refund. If you appeal has been completely favored, that order will be stayed, and that is an automatic stay. And thereafter, revision authority give you the hearing for making your submissions, and based on the submission, they pass the order. The law provides that in this situation, revision authority cannot revise the order. They says that if the order is an appealable order before the higher forum, then yes, it cannot be revision cannot be done. Secondly, even though it is appealable before higher forum, but before the expiry of 6 months from the date of the order, they cannot go for the revision. Third, after 3 years from the date of passing the order, no any revision authority can initiate the revision proceeding. And last, it says that if the order, revision authority intend to pass any particular order which has already been passed by the revision authority passed, in those points they cannot go for the revision proceeding. Next step is the appellate tribunal. Now in appellate tribunal, no doubt it has not been constituted, but just what is the actually procedures, or what is the how this tribunal is going to be constituted. There are two types of tribunal. One is the national tribunal and second is the state tribunal. So like today, for the central law, we have a custom excise service tax appellate tribunal, and for state law, we have a VAT tribunal. So similar in the more or less same line, they are going to constitute national tribunal and state tribunal. In the national tribunal, they are going to constitute two benches. One is the national bench and second is the regional bench. Similarly, in the case of state bench, they are also going to constitute two bench. One is the state bench as well as the area bench. In a national bench, it would be that would be residing at Delhi, and regional bench, they have not decided, but as per the recommendation of the council, they are going to constitute the regional bench. What is the constitution? Which type of matter they are going to decide? Which question they were going to hear? So that is those are very important. You know that in all these benches, there would be 3 members. One is the judicial and 2 would be the technical member as per today's provisions. And therefore, this constitution was challenged in the Madras High Court by the Revenue Bar Association. And Revenue Bar Association and the Madras High Court in that case, they struck down this provision, and they say that judicial member, it should be either equal to the technical member or it should be more than the technical member. It should not be there. The technical member should be more than the judicial members, and therefore, because of this, the tribunal has not been constituted till date, because the various representations have been made how the bench has to be constituted, and it appears that they would now come with the 2 members. One is the judicial and second would be the technical members. It appears they may go constitute in the in this manner. What the question of law, what the law they are going to decide. So in national tribunal, they are going to decide only those cases related to place of supply. So only those matter where the issue pertaining to place of supply is involved, those cases will be heard by the national bench, and all other cases other than place of supply is going to be heard by the state bench. So, meaning thereby that in case of the issue involve place of supply, including all other cases, other ancillary issues, it is going to be heard by the national bench or otherwise in the state bench. Now, how it is going to be constituted? That in case, as of today, there are 3 members as we discussed. But in case third member is not available, then 2 members bench can be also constituted. There will be also constitution of 1 bench, but 1 bench would be a single bench judge bench would be heard only those cases where the matter pertaining to question of law is not involved, and 2, the amount involved in the matter is below the 5 lakh rupees. So if these are the 2 questions, when there is no substantial question of law, and second, where the amount involved is less than 5 lakh rupees, in those cases it can be heard by the single judge bench. In case if there is a difference opinion, it will be referred to the third members. Now, appeal, when you file the appeal, what is the procedure prescribed? They say the one appeal is required to be filed by when appeal is required to be filed by the assessee, that appeal is to be filed within the period of 3 months from the date of the communication of the order. In case the department is going to file an appeal, then instead of 3 months, the time limit of 6 months is given to them. Once the appeal is received either by the department or by the assessee, the respondent is given opportunity to file cross objections, and those cross objections is required to be filed within 45 days from the date of receipt of this appeal. If there is a delay in filing the appeal in 3 months or 45 days for cross objection, tribunal has empowered to condone the delay. There is no time limit. So even though appeal is filed after 1 year, 2 years, or 3 years, if sufficient cause is given for not filing the appeal within this prescribed time limit, then the tribunal has a discretion power to condone the delay. What is the requirement of pre-deposit? As we discussed about in the case of first appellate authority, there was 10%. Here it is at 20%. So 10% before the first appellate authority and 20% year before the first appellate authority. That means during the appellate proceeding, during this proceeding, we are going to deposit 30% of our tax liability with the government. And in case of the admitted liability, yes, we require to deposit the entire amount. And here there is a processing fees or filing fees, and that filing fee would be 1,000 rupees for every 1 lakh rupees, and that is maximum of 25,000. In respect of certified copy also, as we discussed, here there is same procedure, 7 days for filing the certified copy of the order. The tribunal here also can give maximum 3 adjournments. Here the tribunal is given power to remand the proceedings. So after hearing, if the tribunal finds that the order is not deemed fit in terms accordance with the law, the tribunal can remand this matter either to the adjudication authority, revisional authority, or the first appellate authority. And again, here also time limit of 1 year is provided for finalization of the appeal. This is a new provision has been invoked here. It is not like under the GST or VAT enforcement of the order. So once the order is passed, then it is an enforceable order. So under like Civil Procedure Code or CPC, when any order is passed or decree is passed, it required to go for the enforcement. And where the order can be enforced, in case of the company where the register office is situated, their order is required to be sent for enforcement of the award. And in case if there is a person other than company, then where the person carries on the business or carry out the work there or resides, then the order is required to be sent for enforcement. Enforcement means whatever the amount is required to be deposited, or whatever the amount they confirm in the order, for recovery of that order or for enforcement of the order is required to be sent. What are the powers given to the tribunal? The power is given in this way that what the specification we discussed, that power is specified here. Apart from that, the tribunal has power to summons to any person or enforce the attendance of any person or examining in the oath. So like the department issue the summon, the same way tribunal can also issue the summon to remain present to any person before them. They also ask the any person for production of the documents. They also take any affidavit of any persons. Similarly, if they require any documents from the public, they require any public document, they can call for the public documents. They also appoint any commission to carry out or to examine witness or the documents. They also, the tribunal has also power to dismiss representation for default or deciding the matter ex parte. And normally, if you see the what the power is given, if that is a what the under CPC, those all the powers are given to the tribunal. So, but here, kindly just not that being a last fact-finding authority, they can issue someone, they can call for the documents, they can appoint commission, they can examine any person. So those are the vital powers. Normally we have not seen till date. Normally tribunal examine the, or exercise this option, but since there is a express provisions are given in this provision in this GST, and therefore I'm sure that tribunal is going to exercise this type of power, and it really help to reduce the litigations. Once the tribunal or appellate authority decides the matter in the favor, then whatever the amount of pre-deposit made by that assessee, that is going to be deposited along with the interest from the date of the deposit of this amount. So this is a very welcome provision, because why welcome provision? Because till date, and in case if you make the pre-deposit and the appeal comes in your favor, this pre-deposit amount is never refunded along with the interest. But here there is a strict provision, there is statutory provisions that this amount is required to be refunded along with the interest, and again from the date of the deposit of this amount. So that is very important. High Court and Supreme Court. Now let me in the High Court, if any order is passed by the tribunal, then you can go for the you can file appeal against the that order before the High Court. Kindly note here, you cannot file appeal in all the cases where the national tribunal has decided any issue. That means the issue is pertaining to the place of supply, then High Court does not have power to decide this issue. Against that order, you have to approach to the Supreme Court. So before the High Court, whatever you can approach to High Court, in other words, I would say that when state bench has decided or state tribunal has decided the issue, against that matter only you can go to the High Court. But if national bench decide the issue, then you have no option but to go to the Supreme Court. Now here High Court also, time limit for filing appeal is 180 days. You can go to High Court only on the substantial question of law. The High Court division bench of the High Court will decide this issue. So there would not be single judge, it would be division bench, it would be two judges who will decide the issue, and if there is a difference of opinion, it would be approached to the that third judge will hear the matter, and based on the majority, the matter will be decided. If the appeal is not filed within a period of 180 days, the High Court has power to condone the delay. Similarly, in case of the Supreme Court, there is no time limit prescribed under the law for filing appeal to the Supreme Court, and therefore the normal time limit which is prescribed in the Supreme Court law, that law will be of that time limit will be applicable, and therefore 60 days time limit will be applicable for filing the SLP or filing the appeal. And here also the whatever the matter decided by the National Tribunal as well as the High Court, those order can be challenged before the Supreme Court. Next point is regarding that once the High Court, once the proceedings pending before the High Court or Supreme Court, then it is considered there is no stay, and therefore you have to either deposit the amount which is there in the impugn order, or you have to seek specific stay before the High Court and the Supreme Court. There are four types of the cases which is not appealable order. It says that when any order has been passed for transfer of case from one officer to another case, those are not appealable order. Second, if any order has been passed for retention, for seizure or retention of the books of account or register or other document, those are not appealable order. Then if any order has been passed for initiation of the prosecution against the particular person, those are not appealable order. Order has been passed under section 80 is also not a appealable order, but does not mean that it is not appealable. That means you don't have any remedy. As we discussed, when there is no any remedy available under the Act, you can definitely invoke Article 226 to go to the High Court. So this is in respect of the litigation procedures, and I have still 10 minutes with me. So just we go for the High Court. Some High Court decision. Just I take up the two decisions or three. Let's see what the time permits. First decision in respect of the Brand Equity Treaties Limited, and everyone knows about it is in respect of the transition credit. So issue arose before the High Court before the Delhi High Court that in case the transition form was not filed on or before the due date, and it was filed later on, admitted it was filed after the due date, whether it can be entertained or not. So in this case, brand equity, what was the facts? That they did not file the transition form on the wrong advice given by the someone that you are entitled for the refund, and therefore after due date, that means in the month of February or March of 2018, they filed the refund claim. Since department did not act on the refund claim, the concerned person approached the authority. Then they realized that yes, they are not entitled for the refund, and therefore they filed the transition form, trans 1. Since trans 1 was delayed, therefore they approached the Delhi High Court. Delhi High Court remanded the matter with the observation that let IT Commission or Redressal Commission decide this issue. Since no any order was passed, again this matter was challenged before the High Court. In High Court, what the contention was raised, that since GST was at a nascent was in nascent trial and phase stage, and therefore there were so many technical glitches, and therefore they required to allow to file this trans 1 even after due date. Second contention was raised that it was unutilized amount of the Senate credit lying in their earlier regime, and they are required to be carried forward in terms of this GST. It is our property, it is a property of the petitioner, and therefore that creates the wasted my rights. They also contended that Article 300A protects under protects that there is a protection of that under Article 220, Article 300A, and therefore this protection cannot be taken away by the sub legislative by under Rule 170. Lastly, they say that ultimately it is my vested right. Main statutory provision, that means section 140, does not provide any time limit. There is a sub legislative, and sub legislative cannot taken away my vested right. So these were the points were contended by the assessee. What was the contention made by the department? The contention made by the department was that ultimately it was a negligent on the part of the assessee not filing the claim within the time limit, because majority assessee, majority people filed their claim within the due date. They did not face any problem. Secondly, the petitioner did not show that they attempted to file this trans 1 before due date, because their own case was that ultimately they were impression to file the refund claim and therefore did not file. They say also it was contended by the department that it was a negligence on the part of the petitioner. Next, they contended that section 164 empowered the central government to make the law, to make the statutory provision effectively. So section 140 has been introduced for this transition credit. In terms of 164, they introduced rule 117 to carry out effect of the provision of section 140, because section 140 specified that in terms of the prescribed form and as prescribed. Prescribed, that means as provided under the definition, that means under the law, under the rules, and therefore 117 has rightly been introduced time limit. Then they say it's not a wasted right, because whether credit is given or not to be given, it is a prerogative of the statutory authorities. And as they rightly said that, because like if you see under section 17, there is a block credit, where we are not saying that department has wrongly, department is not rightly allowing credit, or they have they unnecessarily block this credit, they should allow. We are not disputing that, because we are not contending that point also because of the because it is statutory provisions. So department contended that it is a vested right. It is not a vested right because it has been introduced through the statutory provisions, and therefore it is not even considered as a property in terms as contemplated under Article 300A. The Delhi High Court examined all these points and very beautifully passed the order by saying that, see, this is at the earlier stage. There were so many technical glitches, there was so many error in the portal, and that shows from the various angles, because of that you have extended the time limit from time to time. Earlier there was a time limit for 60 days. Thereafter time limit was extended, then up to 28th December 2017. That shows that yes, there were technical glitches. They also said that because of the various representations were made, you constituted IT redressal committee. And why IT redressal committee was constituted? Because of the people faced the problem, and therefore it shows that yes, there was a technical glitch. I could also observe that in many circumstances, High Court remanded matter to this IT redressal committee, and that IT redressal committee favored in the favor of assessee by saying that yes, they are permissible for this ITC transitional credit. They also come across that the notification 49 of 2019, where the time limit for filing trans 1 was extended for till 31st December 2019 in a case where there was a technical glitch. So High Court says that you have opened this portal till 31st December 2019 who faced the technical glitch. So why not for the other assessee who could not file this trans 1 for XYZ reasons? Because it may not happen for every assessee to have to keep the evidence that yes, I face this problem, so let I keep this evidence with me. Because people are not aware about the law, they are not so judicial, they are laymen, and therefore the High Court say that in many technical, when how the word technical glitch should be interpreted, it does not mean that if when I face the problem, so I store the data, that means it is considered technical glitch for me, but the person who did not save that data, for them it is not considered as a technical glitch. So the the High Court invoked the Article 14 and says that you cannot put this type of artificial bifurcation between the person who faced the who faced these technical glitches and who did not face this technical glitch. And lastly, they say that based on the various decision that the credit was rightly eligible under the earlier regime. Because of your introduction of the new law, this has been transmitted into the new law under GST. It is an obligation upon the authority to carry on the smooth transfer. It is not required to be done by the assessee. And they also consider various decisions. They also consider decision of the Gujarat High Court in the case of Viluwood as well as Siddharth Enterprise, and hate that after, even though Viluwood craft decision was against the assessee, but later on the same Gujarat High Court considered that legitimate claim under Siddharth Enterprise, and that decision was followed in various decisions. And based on that decision, the High Court passed the order in favor. But what is the one point the High Court says that this is a wasted right, and therefore it is an obligation upon the authority to claim this credit within a period of 3 years from the date of introduction of law. Now this credit was required to be transmitted on or before 30th June 2020. So time limit is now likely to, time limit is over by 30th June. And I'm sure that if any person has shown attempt, or he has at least made an application before the authority, can very well go to the High Court by saying that yes, I made an attempt before 30th June 2020, and therefore I'm entitled to be in terms of this. Provision. Now next, no doubt everyone knows about this brand equity decision has been stayed by the Supreme Court. But what is the law now? What the petitioner, we should do it? So my view is this, that whoever filed the claim before 30th June 2020, if IT redressal committee has not opened the portal, then they should file the petition and at least they lodge their claim and keep the issue alive. Because we are not sure whether the Supreme Court order passed in favor of the assessee or against the assessee. And what are the after that decision of the brand equity, another same issue arose in the case of Balaji Impacts in the Delhi High Court. In that case, Delhi High Court issued the notice and passed the order that let the matter be listed before this court after the Supreme Court decide this issue. So I'm sure that this is going to be happen everywhere, that the authority, the petitioner would not decide now finally, but at least once the claim is lodged, then if the Supreme Court decides in our favor, then you are entitled for the trans credit, or otherwise you will lose the matter. Even High Court as of today, Gujarat High Court in the case of Gallop's infrastructure and and many other decisions, they are allowing the trans one based on their own decisions, based on the Siddharth matter. In case of Madras, Bombay High Court also allows this the transition credit, even though trans one was not filed before the 20th December 2017. And same way in the case of the Punjab and Haryana High Court. So according to me, as I said, that we should go for we should file this trans one. Last decision, just let me, I'll take not more than 5 minutes in this decision, and then I'll conclude from my side. Mohit Minerals Private Limited. No, this is, everyone knows about the issue that here the two notification was challenged. One is the notification number 8 of 2017, which talks about the liability of GST on services provided by non-resident person to a non-resident person for transportation of goods by the vessel. And 10 of 2017, that notification deals with the situation about liability of tax under reverse charge mechanism on the importers. So the issue before the High Court was that whether GST is required to be paid by the importer under reverse charge mechanism in a case where supplier good was a non-resident person and recipient of service is also non-resident person. There was also another issue whether IGST is required to be paid on ocean freight in a case when the transaction on FOB basis as well as high sea sales basis. Everyone knows about the three concepts, but let me put in a one line concept. What is the CIF concept, FOB concept, and high sea sales agreement? CIF means that ultimately the responsibility of the freight is upon the supplier. In the case of the FOB, the insurance and freight responsibility is upon the importer. And in the case of high sea sales agreement, when the goods are sold, before goods cross the custom frontier, those are the high sea sales agreement. So here, our main contention before the High Court was that as a importer is neither the supplier not the recipient of the service, and therefore you cannot demand the tax from the importer. And why we say that it is not a recipient? Because recipient has been defined under the CGST law under section 2 subsection 91. The recipient in the context of the service means the person who pays the consideration. That is one. In case consideration is not ascertainable who paid, then in those cases the person who received the service is liable for is considered as a recipient of the service. Now in our case, being importer, we are not we have not paid the consideration, therefore we are not recipient. If we see the second part of the definition, that the person who received the services, here we never received the services because ultimately shipping line provided services to the non-resident person to the supplier located outside India. So neither importer is neither recipient nor supplier, and therefore they say that we are not liable for a GST. We argue that section 5 of IGST, which is a charging section, there is a subsection 3. Subsection 3 empowers the central government to charge or to pay the IGST by under reverse charge mechanism, but that is by the recipient of the service. So as I contend that we are neither a recipient nor a supplier, and therefore we are out of section 5.3. Once we are out of section 5.3, then by way of notification, you cannot create deeming provision and charge tax on us. So this was the main argument. Second, our main again argument was that section 1 of IGST Act, it is applicable to India. So any supply is done in India, then it is chargeable to tax. If the supply is done outside India, there is no chargeability of tax. So ocean freight is, so that service is provided in the non-taxable territory and therefore not required for tax. And so any other various ancillary points were raised. How the High Court has decided this issue? The High Court has decided, again, as this is the section 5.3, puts obligation, empowers the central government to charge tax under reverse charge mechanism from the recipient. since we are not recipient of the service, and therefore they say that yes, it is not liable for tax. Second, they also says that if service is provided by a non-resident person to another non-taxable territory from a place outside India up to custom frontier, then it is neither considered intrastate supply nor considered as an interstate supply. The High Court also considered that what is meaning of interstate supply, what is intrastate supply, they have considered in detail, but because of time, paucity of time, just I'm not dealing with in detail. But they consider that section 7(1) and 2 is not applicable, but because that is for the goods. Section 7(3), it talks about that supply, location of the supply of the service and the place of supply is in India, then it is considered as a, then it falls under section 3. Here supply is from outside India, and therefore 3 is also not applicable. They also discuss with us regarding section 7(4), and 7(4), if you see that section 7(4), it talks about that supply of service imported into territory of India shall be treated to be supply of service in the course of interstate trade or supply. Here they say that there is no import of service, because when we read the definition of the import of service, it says that supply of service is located outside India, recipient of service is located in India, and place of supply is in India. Now, if we see here supply of service, that means shipping line located outside India. That is correct. That match with that definition. But recipient of service is located in India. Now, here, who is the recipient of service? The recipient of service here is the supplier, and therefore they say that it does not meet with this definition, and therefore also not match with the fourth part. They also say that residual provision section 7(5) is also not applicable, because the supply of goods or service in the taxable territory has not been defined. Even place of supply also does not contemplate this situation, and therefore they hold in favor to the assessee. Sixth point on which the High Court hold in favor, they say for reverse charge mechanism, there should be recipient and there should be payment. In this case, for ocean freight, where the supply is liable for the ocean liable for payment of ocean freight to the shipping line, so there is no time of supply for or no time of supply for this type of services, and therefore they contend that ultimately there is no time of supply for such transaction. Second last point, seventh point, they consider that value of supply of service, and that is again can be decided if when the supplier recipient is unrelated person at the time of place of supply. So here they say the importer is neither the supplier nor the recipient, and therefore not eligible for this point would also not come into purview. And last point, they say the ITC. Who is eligible for ITC? ITC is eligible for the recipient of the service. Here neither importer is neither a recipient of service, and therefore he is not even eligible for the credit. So no doubt when time permits we can discuss this window is in detail, because it required to consider, there are so many points has been considered, and very well way the decision has been drafted, and we can be said that is one of the landmark decision on this point. And let I conclude it here, and I just ask to organizer to take this on further.
Yes, Hardik bhai, thank you very much for your wonderful deliberation on litigation and 3 judgments of Gujarat High Court, basically. 2 of them, I guess, from Gujarat High Court. Thank you so much. We really are able to know more about, basically concern about Tran 1 credits, and I guess participants will be able to take their position with your deliberation and discussion. So thank you very much. Now we are starting our second panel discussion on the issues which we have collected, and for that we are having our own indirect tax committee chairman Rahul Maliwal, myself, and expert Sachin Tendulkar, or what I can say Dhoni, Hardik bhai, who has a vast experience. So We'll try to complete all these 21 questions. Hardik bhai, in your sessions also we have received some questions, but we will discuss it. We are having a bonus round tomorrow with the Jigar bhai. So we'll try to also ask you to, if convenient to you, to join in the evening again.
Sure.
So now I will share the presentation and the questions. So the first question is, Hardik bhai, for you to answer. If you can read and then give the answer.
Yeah, the question, should I read the question, or participants know about these questions?
No one, like not all. So it's better if you can read it.
Yeah. A company having registered office at Ahmedabad providing works contract service related to construction get new order from another state like Maharashtra, in which companies does not have any permanent establishment, then how it can be registered for GST in the state of Maharashtra? And second, further in above query, if the company rented a house for their staffs member in the state of Maharashtra, then can it take a GST registration of the company on the on that rented house if the owner has no problem? So just the question is that if put in a small in a very short way, that if a person registered in one state required to get registration in other state for the work contract services related to the constructions, I put other answer in this way, that first, whether does it require to get registration or not, and two, if required to get registration, then second is how, that is a procedural aspect. So first, I may say that if why should person go for the second for registration in a case when he has already registered in the one state? According to me, there is no requirement to take the second registration for particular that state. And why I'm saying that it is not required to take the second registration particular for that state, because section 22 it talks about when you require who required to take the registration and where. So it says that taxable person required to take registration from where he makes the taxable supply. So if the registration, if the contract is done or particular transaction has been signed in the state of Gujarat, and let's take an example in Ahmedabad, then in that case, if he supplies the services from Ahmedabad itself, question arises whether am I required to register in Maharashtra? Answer is no, for the reason it going to supply from the Ahmedabad. Secondly, whatever the taxable services he receives, for example, goods or everything. So if I'm going to receive the material from state of Gujarat, then that person would raise on bill on me on by charging C+S. If Maharashtra person, if the person who supplier is located in Maharashtra and they are going to supply me the services, then they are going to raise bill for IGST. When they raise the bill for C+S, state of Gujarat, then that bill to ship to concept can be introduced. So the Gujarat supplier raised bill on me and the make supply to the state of Maharashtra, and by making the supply from the state of Maharashtra, that is IGST promise bill to ship to provision, they very well cover that situation. Similarly, in the case of IGST or in the case of Maharashtra's person, when they raise bill on me, they raise the bill on me for IGST, and they supply the bill on the they supply the bill to the goods to the to in the state of Maharashtra. So according to me, there is no requirement to take the registration. But let's take an example. If the assessee himself wants to take the registration, because many times they may realize that they find that yes, there would be litigation issue because there is no clarity on this issue. Then in that case, yes, they can very well get a registration at the rented premises, and if the owner gives no objection certificate, then based that certificate can be produced before the authority and can get the registrations. That is my answer on this issue, and I'll just support with my submission with this point. There is a recent decision of the Advanced Ruling Authority in the case of T&D by Karnataka. This is a very surprisingly how this authority has given the favorable decisions, and that authority says that in the identical situation what the question raised here, in that case the Karnataka High Court of the facts was in this way: that person was registered in Rajasthan. They got a work contract related to construction from state of Maharashtra, from state of Karnataka, for construction of the township. There the person approached before the Advanced Ruling Authority, am I required to get registration in the state of Karnataka? And secondly, what is the situation regarding the ITC, and what is the situation regarding the tax liability also? The Karnataka Advanced Ruling beautifully narrated all these three angles and favored into the assessee. So in support of that also, I can that is a decision of Advanced Ruling now, and therefore we can very well take the stand. There is no requirement to take registration. But even though if you want to take the registration, yes, you can go and registration, or you can go for the registration on the rented premises, subject to owner give no objection certificate.
So Rahul, would you like to add something, or are you having some different view on it?
No, I am totally agree with Hardik bhai.
Yes. So so far as second question is concerned, that whether person can able to get the registration or not, we all are of the same rule. Yes, they can get the registration. So far as the first question is concerned, that whether the person is having a fixed establishment or not, that question has to be answered. So people, person, and performance. Permanence, people, and performance. If these three are satisfied, then it will be a fixed establishment in Maharashtra, and the contractor is required to get himself registered. Also, it is better if he get himself registered, then he can avail the input tax credit, which is he going to accumulate in Maharashtra. With this, now we are moving to a second question. Second question is that, and I will take this question. One HCN received by the client belong to tax period 2014-15, asking service tax on the base of TDS deduction shown in form number 26 AS. So the in client's client supplier, client has a client's customer basically has deducted his TDS, though he has supplied goods to him, and on that basis, on that income, when department has compared that their TDS certificate, that is 26 AS, and their service tax return, they found that there is a gap, and for that difference, they are saying that since your TDS has been deducted by your customer, you are liable to pay service tax on the same transaction, though the supply is of goods, that is excisable goods. So if you want to defend this transaction, I can say that you have to show your invoice of excise, and you can also take the certificate or confirmation of your excise officer that you have paid excise duty on this transaction. Also, you can show your VAT return, because in VAT return you have paid VAT also as per the product, as a goods and not as a services or a works contract. So third scenario is that you can also take an affidavit of your customer that he has wrongly deducted your TDS, or you can ask him to revise his TDS return. So with this, you can defend your submission, and I'm sure that you will definitely succeed. So Rahul bhai, if you are having any different view or you want to add something, please.
Yes, this is totally perfect, and many times we have seen the client is wrongly deducting the TDS, and later on we say them to revise the same, and they are revising the same, on that particular basis also it is helping a lot.
Hardik bhai, what's your view?
Yeah. Yes, agree, because ultimately substance of the transaction is more important than the substance of the transaction is very important.
True. Now we are moving ahead, and Rahul bhai, this question is for you.
Uh, while calculating the turnover for the purpose of registration, whether we need to include the dividend income, sale of share, interest income, and renting of residential house, as section 17 provide sale of share is exempt supply, and second part in that is sale of old jewelry by an individual to jeweler will not make the jeweler liable to pay RCM on such purchase. However, if an unregistered supplier of gold ornaments sell it to the registered supplier, then the RCM apply. Is this true? Now, so coming back to the first one, for taking the registration, there is a section number 22. Section 22(1) says, in case every supplier need to take registration if the aggregate turnover exceed rupees 20 lakhs, and aggregate turnover exceed rupees 20 lakh, and then the proviso is added to provide for in case of goods it is 40 lakhs. Now what we need to consider is the aggregate turnover. So aggregate turnover is defined under section 2 subsection 6. That is the aggregate turnover means the turnover that include all taxable supply, exempt supply, as well as exports, but it does not include the value on which you are liable to make payment under RCM. So now it includes taxable as well as exempt supply. So the first question comes is that whether interest income, like for example, in this question it is not specified which type of interest. So let us take it is the saving bank interest, FD interest, like that. So if a person is having the saving bank interest and FD interest, we have the two advanced ruling recently. One is in the case of Anil Agrawal and the second is in the Savai Manohar Lal Rati, that is the Gujarat AAR. It says that the interest income, when you consider, it is by way of the notification number 12 2017 central tax rate, it is given the under the serial number 27A that interest income is being a exempt supply of service. So by considering that point of view, that the advanced ruling said that this is the exempt supply of service, so it is the you need to add into the aggregate turnover. But my view is different from that, because first of all you need to consider whether it it is a taxable supply or an exempt supply to be a supply first, and it must be fell under the section 7. So the supply, it must be in the course or furtherance of your business. If it is not in the course or furtherance of your business, then it won't be a supply. If it is not a supply, then it won't be even a exempt supply. Even the CBC is released one press note dated 13th July 2017 in the case of jewelry, whereby it was in the case of the jewelry whereby a person who is a registered person, but he is selling his household jewelry to the jeweler, whether the RCM would be applicable in that case or not. So the CBSE has clarified the person is selling the jewelry not in the course or furtherance of his business. It is not in the course or furtherance of a business, so the RCM is not applied. The same analogy is going to apply in the case of interest of the FD interest, because that FD interest or saving bank interest is not in the course or the furtherance of his business. He has earned something, and on that particular bank balance he is getting the interest income. So if it is not a supply, then it should not be included in your turnover. But both the AAR says, as it is covered under the notification number 12 2017 entry number 27A, hence it is going to be exempt supply. Second is the sale of dividend income and sale of shares. Now first of all, let's come to the sale of shares. Again, it must be a supply. The supply of the section 7 says supply of the goods or services. Now if we read the definition of goods, that is covered under section 2 subsection 52. Goods means all the movable property other than the money and security. So the security is excluded from the definition of goods. Second, now whether it is service, so section 2 subsection 102 says service means anything other than goods and security. So the security is excluded from the goods definition as well as service definition. So the sale of share is not a supply. As it is not a supply, so it will not form the part of your aggregate turnover. Now if you say that section 17 provides this here there is a question that section 17 provides share sale is exempt supply. Now this section 17 is in relation to the credit and the input tax credit, and where the section 17(2) says that you need to reverse the common credit that is attributable to the exempt supply. But this exempt supply includes the sale of share by 1% value would be considered, but that is only for the limited purpose of section 17(2). It is not going to be applied to the entire act. So this is only for the limited purpose of section 17(2). Share sale is considered exempt supply, otherwise it is not a supply, will not be considered as a part of your aggregate turnover. Same way, dividend income is in relation to the securities. It is the accretion by the security from the security. It is not a supply, hence it will also not taken part of the aggregate turnover. And the last one is the renting of the residential house. So the renting of the residential house, yes, it is renting is a supply, but and it is renting of the residential dwelling is covered under the exempt supply by way of the notification number 12, entry number again 12. So it is exempt supply and it will be included in your aggregate turnover. And the last question is in relation to the jewelry. So here the press note itself has been clarified. If a person who is not registered is selling the jewelry, his old jewelry, to the register to the jeweler who is registered, then in case of before 30th October 2017, then also no RCM was applicable under section 9(4) because that supply was not in the course or furtherance of the business of unregistered person. So this is my answer with this question.
Yes.
In case if you want to
Hardik
add
bhai,
anything, Bishan bhai.
would you like to, are you having a different view or a same view? Hardik
I
bhai?
have the I have the same view actually.
Okay, I would like to differ that so far as your sale of share is concerned, renting of residential house is concerned, or dividend income, as Rahul bhai has said, it's a different view, as he has said that it is not for the business, and since it is not for the business, it will not be treated as supply. So same way, if I am investing in residential property and I am earning an interest, so in income tax I am showing it as a house property income. So here my view is that it is also not, I am not into a business of giving property on a rent, and hence it is not supply at all, and hence the question of including the same for the threshold of 20 lakhs under section 22 will not apply. So far as the jewelry is concerned, yes, whatever you have said, same analogy we can apply to renting of residential property, sale of share, and interest income, because my primary business is not to have such income from business. So that is where I am thinking differently. But as you all are aware that Gujarat High Court, Gujarat AR has given a ruling that these incomes are should be included under section 22 for threshold. So Rahul bhai, would you like to add something?
Yes, true. Sale of share, there is no need for discussion because it is not a supply itself, because it is sale of share.
So,
now in case of
so far as your renting of residential house is concerned,
yes.
can we add your analogy that I am not into business?
True.
So
It is totally true. We can add this particular analogy that it is not in my course or furtherance of business. We can go for that.
Okay, so now let us move ahead. Hardik bhai, now it's this question is for you.
Yeah, my client met with the fire accident in his factory on 19th May 2019 and rupees 20 crores worth of plant and machinery, building and stock destroyed. According to section 17(5)(h), block ITC on goods lost, stolen or destroyed, written off or disposed of. Manner of reversal in case of fired capital goods like plant and machineries as per rule 43 is given for ITC to be consumed in 60 months. If it destroyed after 60 months, utilization is to be reversed proportionately. Before destroyed before 60 months, utilization is to be reversed proportionately. ITC on fire stock to be reversed fully. Next question is the interest on reversal, whether starts from the date of fire or from original ITC taken. And along with this, if the compensation is received from the insurance company, whether tax is liable to be taxed or not. So the question, if we just see that the fire took place in the factory, capital goods were destroyed, stock was destroyed. So what is the point, or what is the implication for reversal of the credit or ITC in the books of account? That is first question. Second, if I have not reversed the credit immediately, whether there is interest liability or not. And third question, if I already sought claim from insurance company, then whether there is a liability of tax on this compensation or not. So yes, in respect of provision, section 75 specifically provides that in case of the fire took place, the ITC is not eligible, and therefore what is the quantum of reversal of the credit in respect of the capital goods? As yes, it is rightly mentioned that 60 months has been provided for life or tenure of the capital goods. So whatever the time consumed for use of the capital goods, to that extent capital ITC is not required. For balance life, ITC is required to be reversed. Secondly, in respect of the stocks, yes, ultimately it is considered as a deemed supply, and therefore they say the section 75 credit is not admissible for that stock which has been fired in place, which has been lost in the fire, and therefore whatever the exact amount of the credit we avail for that stock, that has to be reversed. So even though at the time of when we purchased the ITC of goods, that time the tax was high, but when the fire took place, that time the rate of tax was lesser. That does not make any difference. Whatever the ITC we avail on the stock, that has to be reversed. Now next question is regarding the interest. So here the time limit has been provided for the reversal of the credit when the fire took place. So till the fire took place, we rightly avail the credit because we comply with the provisions of section 16, we comply with the provisions of the 17(1) and 2, and therefore at the relevant time when the fire took place, the credit was rightly availed, but the reversal was required to be done on the date of the fire. And therefore if the credit has been reversed on the same day when fire took place, then there is no requirement for the interest reversal of the interest, because there is reversal is required to be done on the date of the fire. I would like to add one more point here, that if we have a sufficient credit in our books of account, then even though we reverse the credit later on, then there is also not interest liability in terms of the section 50. No doubt there is subject to, but it appears that because of it is only merely book entry, because there is an unutilized amount of the credit, and to that extent there is no requirement to reverse the credit. Last question is regarding the compensation, and you rightly mentioned the compensation. It is not a consideration. So there is a difference between compensation and the consideration, because there is a liability of GST if there is a supply, and supply is, as you said, there are three components. One, that should be in the either sell, exchange, barter, that is first component. Second should be consideration, and third is in the course of business or in the course of business. In our case, what we receive the amount from the insurance company is not toward the supply, but because of our claim, because of the stocks and the capital goods lost in the fire, and for that compensation is received, and therefore there is no any connection for that, and therefore it is not considered supply, and according to me, there is no liability of GST on this compensation amount.
Anything to add?
Yes. Just I want to add, here is the reversal on the goods destroyed. It is only on the inputs. If there is certain finished goods that is also being destroyed in the fire, so do the assessees need to reverse the calculation of inputs that is being used on this particular goods, or need to reverse that particular credit also?
Yes, my answer is that ultimately in this case there is a requirement to reverse the credit to the extent of input used in the finished goods, or the input lie in the work in progress goods. There is no requirement to reverse the credit on the value of the finished goods.
Okay, so I slightly differ on this particular point, that according to me, we need to reverse the credit only on the inputs that is being destroyed. in case if there is some finished goods that is being destroyed, that is drawing the analogy of the swastik coal, because section 17.5 start that we need to reverse the credit in respect of goods destroyed. So in respect of it has to be in the connotation of that particular goods. So it must be restricted to the inputs only. If there is something finished good is being destroyed, then we are not supposed to recalculate the inputs that is being used in that particular finished goods and reverse the same.
There is one decision of Gujarat High Court of larger batch, again larger batch, in the case of Intas Pharma. If I'm not, I think there is Intas. I'll share with Rahul bhai with you. In that case, because earlier you are right that earlier this is provision under the Excise Act for remission of the good, for remission of duty. That time the call was taken only on the input, but later on this was interpreted, and this is that not only input, but whatever the input contained in the work in progress goods as well as the finished good, the same analogy would be applicable. But yes, we have to again test, because now it is a new law, and therefore we require to test this argument again. And you never know what time what would be true with the judges, because it differ from person to person. Ultimately, judges are also human beings. So many times we have seen that we get unexpected orders and we get unexpected result also.
True.
So meaning thereby, if we refer rule 43, then it doesn't talk about reversal of 17.5H. Rahul bhai, I can say that according to you, only credit of input is required to reverse, not of finished goods and not of capital goods. Whereas Hardik bhai is of the view that input and finished goods, both credit are required to be reversed. So what about the capital goods?
See, Bishan bhai, in respect of capital goods, the rule 43 specifies that is time limit is provided for 60 months.
Yes.
So approximate amount of the credit to the extent of unutilized time is required to be reversed. And when I'm talking about the reversal of credit in respect of the finished goods, no, I'm talking about the inputs contained in the work in progress, and input contained in the finished goods credit is required to be reversed. So suppose if let's take an example, I purchase scrap. Out of that, I manufacture the iron ore. So when I manufacture iron ore, that time, whatever the value addition on that, there is no requirement to reverse the credit. Only the ITC on the scrap that is required to be reversed, or ITC on any other raw materials which is being used in manufacture of iron ore, which has been destroyed in fire, is required to be reversed.
Okay. So now, so far as the interest is concerned, from the date of fire, it is required to be reversed. I guess we all are agree to that. So far as the compensation is concerned, that insurance claims are concerned, they are actionable claims as per the Transfer of Property Act, Section 3, and Schedule 3 says that they are not a supply. So definitely there will be a no tax on the same, as said by the Rahul bhai. Now we will move to the next. That is, in case of 1819, RCM is paid currently, then can we claim the credit of same now as per timeline of 16.4? As we all are aware that 16.4 says that timeline for availment of the credit is say due date of filing of return for the month of September of the next year. So for the 1819, the due date will be 20th October 2019, and as judgment of Aap and Company saying 3B is not written has been stayed by the Supreme Court, we can definitely say that yes, I have to avail the credit by 20th October. But since it's RCM, the credit is eligible only when I pay the RCM, when the payment of tax has been made. So according to me, also, and I'm required to raise the invoice. It's a self invoice. So if I'm raising the invoice right now and I am paying the tax of RCM now, then I am eligible to take the credit in current period for the RCM liability of 1819. That is my view. Now, if you Hardik bhai or Rahul bhai, if you want to add something, or if there is another view of yours, please elaborate. So Hardik bhai,
See, according to me, after due date of the filing of the annual return, credit on tax paid in the RCM is not eligible because of the section 16(4) specifically debars that ultimately the credit is eligible to the extent of filing of the annual return. Once it is over, then there is a restrictions. So that same analogy even would be applicable for reverse charge mechanism also. So according to me, it's a doubtful. It is not eligible.
Uh, uh, According to me, I feel that the credit can be available because when we read the section 16(4), it says the registered person shall not be entitled to take the credit. And when we go for section 16(1), it says the availment of the credit. So there is an entitlement and one is the availment. So entitlement arises as soon as I take the credit. So availment is means when I credit the same into my electronic ledger accounts, and entitlement means when I entitled to take in my books of accounts, that is maintained under section 35. So if I have taken, if I have recorded the liability in my books of accounts, then in that particular case, even if I have paid the same in the next years, then also I can take the credit.
okay, so there are divergent views. Hardik bhai is of the view that it should not be taken, whereas mine and Rahul bhai's view, yes, you can take the credit. We are moving ahead now. Rahul bhai, this question is for you.
Companies e-commerce operator in home cooked food, they have GST registration, but is it they have GST registration, but is it compulsory for the supplier of home cooked food to get GST registration as they are homemakers? The first is the liability to take the registration is again covered under section 22. So section 22 subsection 1 says if your turnover is more than 20 lakhs, you need aggregate turnover more than 20 lakh, you need to take registration. And with effect from 1st January 2020, a proviso is added that in case of supply of goods, the registration limit is 40 lakh. So if the person who is supplying the goods through e-commerce operator having the turnover more than 40 lakhs need to be registered. Now there is one more section, that is section 24, which is starting notwithstanding anything contained under section 22(1). That means it is overriding the provision of 22. In that, one of the condition is condition number 9. It says if a person who is supplying the goods or services through e-commerce operator, and that e-commerce operator is not covered under section 9 subsection 5 and the liable to collect the TCS under section 52, that thereby here the assessee is supplying to the e-commerce operator, that one part is covered, but second part is that e-commerce operator should not be covered under 9(5). That means 9(5) is for the RCM to e-commerce operator, and in that RCM to e-commerce operator, the services covered is transportation of passenger by way of the cab. Second one is housekeeping services and the accommodation service. But here it is the home cooked food, supply of the home cooked food, and in that case the e-commerce operator is not liable under RCM under 9(5). So even if the turnover is not exceeding rupees 40 lakh, then also as per the provision of the section 24, the person who is supplying the goods through this particular e-commerce operator need to take the compulsory registration. So this is my view.
Yes. Hardik bhai, what's your view for this?
I also agree because ultimately in the compulsory registration, the person will be covered.
Done. So now we are moving forward. Hardik bhai, this question is for you.
Whether the credit of construction material can be taken provided the building is used for renting purposes following the decision of Safari Retreat. See, no doubt, if we think by mind, then not eligible. If we think by heart, then I'm with the Safari Retreat, because Safari Retreat decision is also given based on the equity, not on the law. If you see read the entire decision is on the equity. They say that there should not be leakage of the revenue, and therefore whatever the once the tax is liable on the output supply, that should be eligible for the credit. But if they actually with due respect, but that decision failed to consider the section 17(5), because in 17(5) there is a specifically restrictions in respect of in respect of the some of the services, and just I read that portion, what it say, for goods or services of both received by taxable person for construction of immovable property on his own account, including when such goods or services are used for in the course of furtherance of the business. So what is important, if you just I divide this issue in 2 or 3 portions. One, goods or services of both received by taxable person. There is no dispute regarding that construction material was received by that person. 2, it says for construction of immovable property. So yes, the person who is providing providing property on rent basis, yes, he used this goods for construction. Third is for his own account. Yes, this construction is done for his own account when such goods or service used in the furtherance of business. So according to me, there is a specifically exclusion given under the law, and when there is a specific exclusion given under the law, in that situation the assessee has no option but to follow that rules and regulations. So I can understand if there is no specific restrictions, then ITC this provision is very wide, because eligibility of credit is for the taxpayer is very wide. But when there is specific restriction is given, then according to me, yes, the credit should not be eligible. But today there is a decision of Safari retreat. No doubt that has been challenged. The Supreme Court notice has been issued, and there is no any contrary decision of any High Court. And 2, there are many advanced ruling decisions, and you know that advanced ruling decision is applicable to that assessee only, and to that officer, not applicable to everyone. Whereas the High Court decision is applicable to everyone. So if we go with the decision, yes, it is applicable to everyone and it is eligible. But if we go by as a statutory provision, there is a, according to me, not eligible. So if we see both from the both point of angle, if it is asked my own view, I would say that the credit is not admissible, and it is not in the particular case under earlier regime also, because the Navratna decision, then Sai Mata decision, Mundra Special Economic Zone, all this decision, if you see, that is pertaining to period prior to 2011, because the issue involved in that matter, period involved in that matter was prior to 2011. After that, when there was specific restriction given under the law, that time they have denied the credit and people have not availed the credit or availed the credit, then there is a negative decision. So according to me, we associations should restrict themselves for availment of the credit on the construction of immovable property.
Yes, sir. Rahul bhai, what's your view for this?
Same, I also go with the Hardik bhai, because in Safari retreat, the High Court has read down the provision of Section 17(5)(d), saying that for the limited purpose, because it is obstructing the credit chain. There is a lie. Once he is making the payment on the rental value, but is not taking the credit, so they have read down the provision of Section 17(5)(d). But now let's see what the Supreme Court says about that.
Yes, so I am also of the view that it should be eligible, and when the credit is eligible, definitely we all are happy. Hardik bhai, but can you give some sort of knowledge with when one High Court in the country says it is eligible or it has struck down the provision, whether it is applicable to the SSE in Gujarat, where
Yes.
there is no specific judgment of Gujarat High Court?
Yeah, so that is a whole decision of Kusum Ingers of the Honorable Supreme Court. It specifies that when one High Court has given decision on the central law, then it is applicable to all assessee and it is binding to the department, unless and until there is a divergent view given by the any other High Court. So today, if we see in respect of the Safari retreat, there is no any conflict decision from any High Court. There is no any conflict binding decision either from the appellate authority or any other authority. So in absence of the decision, yes, credit is admissible because the Supreme Court simply issued the notice without staying the operation of that order.
And as Surat Tennis Club in Gujarat High Court also said that when they have said that the provision of club services is unconstitutional, it is applicable to all and not to only the SSE. So I also agree with the same view of yours. Now moving ahead, Next question, client gives various promotional and incentives to advertise the product like keychain, pen and diary with company name printed on same. Do we need to reverse credit for the same? So he wants to ask whether 17.5 block credit will be applicable or not, H specifically 17.5H. So when I am giving any keychain, pen or diary, according to me, yes, the credit is eligible. It will be a sales promotion expenditure, and I will not say, as Rahul Bhai has said, that swastik Tamil judgment, the word used are in respect of, so there are not any inputs, and hence the credit is eligible. So that is what my view. Rahul Bhai, would you like to add something?
Yes, just want to add one more thing, that it must be because section 17.5H says that disposal by way of the gift, it must be by way of the gift or sample. So when we are giving the keychains on the pen and diary, this is for the sales promotion we are giving. It is not the gift we are giving to someone else, because in case of the gift there is a donor and donee, where the donor is not going to receive something back. But in this particular case, I am advertising myself and my product, so it is not even a gift, hence the credit should be available.
Yes, I also say that yes, it is not a gift nor a free sample, and therefore, since it's a promotional activity, I would add just one more point, because ultimately, when you want to say the sales promotional activity, because of the Gujarat High Court decision, again in the case of the Kedila Healthcare, they have given very restrictive meaning, because ultimately in that case also the commission agent, they promote, they go to market, attract customers, and they have to ask Kedila to supply this material and get the commission. So here, when we advise to the client, we have to tell to the client at least there should be some proper evidences on record to demonstrate before the authority in future that this is not provided by way of gift or is not a free sample, but it is for the purpose of the sales promotion activity.
Now the next question, moving ahead, Rahul Bhai.
Whether credit of tax paid under RCM can be claimed in the same month or in the next month, means the month in which it is being paid. So when we talk about the RCM, there is a two type of transaction. First one, the RCM in which the supplier is registered party. Second one is the supplier is the unregistered party. So there is a section 16 subsection 2, it specify 4 things to be satisfied for taking the credit. First one is that you have the invoice. Second one, the goods or services has been received. Third one is the subject to provision of section 41 43A, tax must be paid. And the fourth that is the fourth one, the return has to be filed furnished under section 39. So assume first thing is that supplier is the registered party. If the supplier is registered party and you are making payment under RCM, so the first condition, the invoice must be issued. So the supplier has to be issued the invoice under section 31 if he is registered. Second condition that arises, that payment must be made. So the payment must be made, that is covered under subsection C. So these all are condition when we need to look out that whether we need to fulfill before taking the credit or we can fulfill the subsequently also. So if we say that we are supposed to fulfill all the conditions before taking the credit, then in that particular situation what will happen, even in case of forward charge, assuming I am liable to my output liability during the month of June is 10 lakh and my input is 9 lakh, in that case also I have to take the credit of 9 lakh in the next month. Why? Because section 16(2) subsection condition number D said he has to furnish the return under section 39, and the return under section 39 right now it is 3B. So if I will file the 3B, then if we assume that these all conditions are need to be fulfilled before the taking the credit, then I cannot take the credit of input and input services which are not under the reverse charge mechanism. So the concept is that you need to fulfill those conditions, maybe before taking the input tax credit or maybe after taking the input tax credit. So in case if it is under RCM, if the registered person is registered, then you have to have an invoice under section 31, and secondly the tax has to be paid. Even the tax is paid after filing of the return, then also you can take the credit. And second one is in case if the supplier is not registered, then you need to generate the self invoice under section 31(3) subsection 31(1)(f), and you need to make the payment of tax. So that also the payment of tax is also, I understand, it is the subsequent event. So you can take the credit in the same month.
So say for the month of August, if you have received invoice or if you have paid for transportation charges in the month of August, by discharging its liability in the month of September while with 3B, you can simultaneously take the credit. That is what a view is.
Yes,
right, Rahul?
yes.
Perfect.
Yes.
Perfect. Hardik bhai, do you want to add something?
No, I say only one thing, whether you procure from registered or unregistered person, irrespective of, but the credit would be admissible immediately in the next month on the next month of the payment of the tax.
Example, I have paid some transportation expenditure or incurred some transportation expenditure in the month of August. So now I am supposed to pay the tax of the same, and I have to disclose the same in 3B during before 20th September. So can I take the credit in the September month, like while I'm filing 3B by 20th September for the month of August, or I have to defer to the 3B of
September month.
September.
You can take
So
credit
we are
on
of the view that it should be taken in the month of September. Now, yes, Rahul bhai, this question is for you.
Hardik bhai.
yes, supply of value of supply input tax credit, year-end discounts and intensives issued by automobile manufacturers to their dealers based on BS4 sales support and volume based on discount considered as supply or not. Client booking this as an income in their profit and loss account. Is there any ITC required pertaining to this income or not? And kindly share your see, ultimately I put in this way, that whether year-end discount, incentive, and all this is whether it's a predetermined or it has been decided post sales activity. So if this activity has been decided or this discount has been decided before the sales took place, then yes, in terms of section 15, that value is not required to be included in the value of the supply. And based on that, suppose invoice has been raised, then later on the credit note can be issued and the credit is required to be proportionately reversed. But in case of it is a post-sale discount, then the question arises, then there will be an issue. So in case of the post-sale discount, you can't raise the credit note in terms of the section 34. And then you require to issue as per the required to issue the financial credit note. And if you recollect one circular, that is the 7th March 2019, if it is not wrong, in that also they permitted that yes, ultimately you can raise the financial credit note. That circular was later on amended and updated by way of again one more circular, and if that was after 3 or 4 March, I think it is March 2020 or something, March or 2019 or something, there was later on circular. In that circular, they also specified that if the financial credit note is issued, then there is no requirement to reverse the credit, because the credit note is required to be reversed in the case when the section 34 notice has been issued. But surprisingly, this later circular was withdrawn by the department. Don't know what is the reason for that. So given the facts, the issue here arises that whether that year-end discount which has been introduced, and that is again post-sale discount, assume for a predetermined sale, if that discount is offered prior to sales took place, there is no dispute at all under the GST. But question here arises that post-sale, if this discount is offered, so that financial credit note has been raised, and for that the board has clarified that yes, there is no requirement to ITC, but that circular has been withdrawn. So suppose today this dispute arises, what you can support it, what the document you can support, what the provision you can support. If you read again section 16, it says that payment is required to be made within 180 days. If it is not made the payment, then credit is required to be proportionate amount of the credit is required to be reversed. Now that provision is in respect of the bad debt, I put in this way. So if the supplier considers a bad debt, payment is not made within the received within 180 days, it is considered as a bad debt, then the recipient is required to proportionate amount of the credit. But here we cannot say it's a bad debt. Here we can say that is a renegotiation of the price. And once it is considered as a repayment or renegotiation of the price, the provision regarding 180 days would not be applicable. That is my that I feel in this way. And therefore, even though circular has been withdrawn, but my view is still there that once the financial credit note is issued, that and then simultaneously payment is not made within 180 days, credit was not required to be reversed.
Rahul bhai, your views?
Same view.
Same. So we are going moving ahead, and it will be now rapid fire round. So we will try to complete as many as possible and as quick as we can. So the question is, as per the timeline, refund application has to be filed within 2 years of the relevant date. But in case of supply to SEZ with payment of duty, if time limit of 2 years is expired, then what is the remedy available for the same? So as we are all aware that for the supply of SEZ, where you are paying IGST, the due date will be payment of tax. So when your payment or you have paid the tax, from that that will be the relevant date, and from that you have to consider the 2 years. So if you have any refund for the March 2018, then you are going to save by the suo motu order of Supreme Court that all the limitations will be extended due to this COVID-19 situation, and hence I can say that you can file your refund application so far as the 17-18 is concerned, which are due on March 18 till 30th September. Any quick view?
Agree with you, because of COVID,
Agree.
season can be short.
Agreed.
Rahul bhai, your questions.
In case of builder, while calculating 80% limit criteria, whether the following expense to be considered, like interest on paid on unsecured loan or depreciation on fixed assets. So let's put on this way, like total expenditure is 100 rupees. In that, 20 rupees is interest expense or 10 rupees is depreciation on the fixed asset. Now, that is a notification number 3 2019 that has been issued to consider that provided the various limits for the builders to and the various rates for that. In that, there was a proviso condition inserted that at least 80% of value of input and input services must be procured from the registered dealer, and the procurement on which you are making payment under RCM is also deemed that you have procured from the registered dealer. So you need to fulfill that 80% of value of input and input services. Now let's come to this point, whether 20 rupees of interest paid would be considered as a part of total expenditure or not. Again, as I said, that the interest is not in the course or furtherance of the business of the that also depends, yes, whether the interest paid on the unsecured loan, whether it is unsecured loan is taking from the NBFC or a private party. Because if it is taking from the NBFC, that supply would be deemed as the input services, that is the service which is being exempted by the notification number 12. So then in that particular case, it will be added to total expenditure value. And in case if it is depreciation on fixed asset, the 80% is for the input and input services, and the depreciation is the charge that you have deducted on the capital goods. So that 10 rupees of depreciation will not be counted in your total expenditure. So your total expenditure would be 100 minus 10, that is 90, and you need to procure 80% of 90, that is 72 from the registered dealer. So this is my view.
Hardik bhai?
Yeah, I agree with you.
So far as this interest is concerned, it has to be required to be included in this 80%, and there is an FAQ dated 14th May 2019, and for depreciation, what Rahul bhai said, it's correct. Hardik bhai, now this question: GST implication on sale of developed plot on land.
Yeah, very dicey issue. Till advance ruling came, everyone said that not chargeable tax. And after this advance ruling, in the case of Sri Deepak Nayak, Dipesh Nayak. Now again, it's a dicey, but my view is that it is still not liable for tax for the reason that, because if you see the Schedule 3, Schedule 3 talks about that the sale of land or sale of building. What is land? Whether developed land or undeveloped land remain land only. Whether if the intent of the government is to say that okay, developed land, then they would have used the word there, vacate undeveloped land. But it is not. Then we have to read the legislation absolutely in the stricto terms, and specifically in the case of the tax. What advance ruling he said that one, he referred to the entry number 5B of Schedule 2. Now, when you read the entry number 5B of Schedule 2, it specifically talks about the constructed property. It does not talk about the land, or it does not talk about the any vacant land which has been developed. And for just for sake of the very small entry, then let me read that entry, because it says that construction of complex. So there is not a complex, because if you develop the vacant land, it is not a complex, it is not a building, it is not a civil structure, because it is not a civil structure or part thereof, and including the complex of building. So according to me, it does not fall any of the entry which has been specified in 5B. Advance ruling also referred to one Supreme Court decision in the case of Narne Constructions Private Limited. Now that decision was given in the context of the Consumer Protection Fund, because the Supreme Court specifically said that when we read this law, we have to give the liberal meaning. So we have to try to cover more and more consumer under the Consumer Protection Fund, so that ultimately they can approach to the consumer court. Here, when we read the texting statute, we have to read in a stricto terms. We have to construe it in a strict manner, and therefore my submission is that, or my view is that, ultimately even developed land is not covered under this entry. It is not chargeable to tax, and there are so many points based on which we can defer to the advance ruling decisions.
Agreed. So I am also of the view that land is land. It is not written developed or undeveloped. Rahul bhai, do you want to add something?
Just want to add, in that particular advance ruling, the authority said that they are selling the super built up area, but now with implication of RERA, a person can be sold in case of the land also the carpet area of that land. He is not selling any of the amenities and common area or common part. So there is no point of view of the selling the super built up area of land.
Next question is, Mr. X of Gujarat is getting commission from the foreign supplier for sale of goods in India. Is he liable to tax? If yes, then which tax is liable? It is an intermediary service, and as per intermediary place of supply will be India 13(8), and if tax will be payable as IGST. That is what my view. If anyone wants to add something, or if a different view. So we are moving ahead. Rahul bhai?
The mutual fund agent getting commission of 30 lakh per annum, is he liable for the registration? If yes, can he opt for the composition scheme? So the mutual fund agent getting commission 30 lakh, this is more than the limit that is prescribed under section 22 of, that is of the 20 lakhs rupees. So he is liable for the registration. Is he can be able to go for the composition scheme? So section 10 subsection 1 provides that the composition of the rupees 1.5 crore, that is only for the supplier of goods, but there is a proviso which says if in case of service, your value of the service can be 5% of the total turnover or 5 lakh rupees, whichever is higher. But in this case, there is a no value supply, total value of supply is 30 lakh, and that 5% of that comes to 1.5 lakh. So it is the higher amount, so he cannot go for the 10-1. Now there was a notification number 2/2019 that was issued on 1st April 2019, which provided the composition for the supplier of goods and the supplier of service having the value up to 50 lakh. And thereafter, from 1/1/2020, that is become the part of section 10 itself. That is section 10 subsection 2A, that provides if your turnover is up to rupees 50 lakh and you are supplier of goods or service, you can go for the composition and you can charge 6%. But there is one condition: you cannot make interstate supply of the goods or services. Now in case of the mutual fund agent, suppose if I am a mutual fund agent and I am registered in Gujarat, now I cannot make interstate supply of service to a recipient. For example, in case if AMC, that is the asset management company, is registered in the Maharashtra, in that particular case, the supply would be the interstate supply, and I will not able to opt for the composition. The 6% benefit is not available. If AMC is registered in Gujarat only, all the AMC, then I can go for the benefit of same. This is my view.
So now I agree to that and what you have said. Rahul, Hardik bhai, this question is for you.
Yeah, I'm sure. I'm also agree with that. Now, next question is regarding the 36(4) and Rule 86(a). Everyone knows about it. Yes, it is a punishable provision for, or it is a penal provision for the recipient or a person who availed the ITC. So, yes, how it can be challenged, that is the most important aspect, because here in that manner it talks about it. If we read the section 16, the 4 conditions as Rahul bhai has read it. So this 60, when there is a restrictions are given, the restrictions are given under the section. There is no any restriction given under the rule. But this is the section, the rule 36, where the first time the restriction has been introduced. So question arises whether this rule can go beyond the provision of section 16 or not. My answer is no, they can't go for, because rule 36 again, it talks about the documents for availment of the credit and for condition for the availment of the credit. If you read section 30, rule 36(1), it talks about the document. 36(2), it talks about the what the contents required in that document. Rule 36(3), again in the case of the when the credit is ineligible in case of that supplier paid on account of fraud, collusion, willful statement. But here rule 36(4), they restrict the credit, and that restriction because of the supplier did not upload their invoices in the portal, and therefore the restriction is on the recipient. It is unheard for the reason that this restriction, if they introduce under the section, yes, it is a valid restriction, but they cannot do under the rule 36, and therefore my that is not permissible. And I think various petitioners challenge this action in the various court, like in the Gujarat High Court, in the Delhi High Court, and seems to be the chances seems to be very high to struck down. Similarly, in the case of rule 86(a), again this restriction is given, and there is one Gujarat High Court decision in this context that you cannot restrict this type of, you cannot block the credit this way without issuance of the so-cause notice, without giving opportunity to the person, because ultimately my right has been curtailed. Obligation upon the authority to call me upon, they have to show me the documents, they have to give me the opportunity, and after satisfying with all this, if they block the credit, it is a proper, and that is again by invoking section 73 and section 74 read with rule 86(a). But commissioner cannot suo moto block my credit. That is, I may say, because of the limitation. There are so many things in all these angles on various points based on which you can challenge these provisions also.
Yes, right. And due to COVID, they have put in abeyance this 36(4) until from February to August. If you don't see don't fulfill the 36(4) criteria of 2A reflection of 2A, then there is a relaxation. Rahul bhai, do you want to add something?
No, I'm
okay. So
agree.
We are moving ahead. At the time of supply of goods, rate of tax was 18%, and subsequently rate was changed to 12%. Now, if the goods were returned by the recipient, credit note to be issued at which rate? A plain vanilla rule, I can say, if you if you have sent at 18%, reverse it at 18%. If you have supplied at 12%, reverse it at 12% and give the credit note. Otherwise, what will happen? That say today you have supplied goods at the rate of 12%, and tomorrow the rate has been changed, and the goods are returned, and you give the credit note with 18%, and in that case you are benefited, but your customer will have to lose because he has to also reverse the credit. So plain vanilla rule is that at what rate you have supplied, you have to reverse whatever is the rate of tax section says about. That is what my view. Is there any different view? Done.
I agree.
So Rahul, this question is for you now.
My client is engaged in the business of cash management service where he transport the money from bank to ATM, whether the credit of such vehicle is available. So section 17(5) again plays into that. With effect from 1st February 2019, the definition is being changed. Now the restriction is only on the motor vehicle, that is also passenger motor vehicle having the approved capacity up to 13%. So this is not the passenger motor vehicle, hence the credit should be available. But before 1st February 2020, so 19, so the criteria was that the in case if the vehicle is used for the transportation of goods, then only the credit is available. And we have the one advanced ruling, that is of the CMS, which was the advanced ruling by Maharashtra, which denied the credit of the same. And right now that has been that appellate authority has granted the relief to the assessee, saying that the credit is available because of two things. First, that the definite the goods as the advanced ruling said that the goods, the definition of goods does not cover the money, so it is transporting the money which is not the goods, hence the credit should not be available. So the appellate authority said no, you need to define the meaning of the money in such a manner, that is the section 2 subsection 75 says money means the any legal Indian legal tender or any foreign currency, check, promissory note, when it is used as a consideration to settle any obligation. Here in this case, money is not used to settle any obligation, it is just used as a goods to be transported. So in that particular context, the credit should be allowable. And even in the rule 138 sub rule 14, which provide the exemption for the transporting of the goods where the e-way bill is not required, in that annexure also under the goods, the department the rule says that the money for which the e-way bill is not required, so the department also presume that the money can be under the part of goods, so the credit should be allowable, and the appellate authority given the favorable judgment in the for the assessee.
So Hardik bhai, this question is for you.
Assessee is involved in taxable supply only. There is no exempt supply, but he has some sale and purchase transaction equity. Does he require to have proportionate reversal credit under section 17(2)? So again, according to me, there is requirement to reverse the credit only for the reason because 17(2), there is a specific that definition is provided for the exempted supply under the explanation under 17(3). And when it 17(3), when there is a specific explanation provided for that, then the effect has to be given in the stricter terms, and therefore the credit is required to be proportionately reversed.
Do you want to add something, or?
My view is slightly different because section 17(2) says when where the goods or services or both are used by registered person partly for effecting taxable supply and partly for the exempted supply. So in case if my total turnover is taxable supply, because 17(3) comes when you satisfy the condition of 17(2). If there is a no section 17(2), section 73 won't become. Section 73 only come that in case of exempt supply we need to add this. So if I am my 100% turnover is the taxable supply, so I am not hit by the provision of section 17(2). So there should not be any reversal under of any reversal and for the supply of shares, sale of shares.
Okay, so house is divided, and I can say that this issue will going to be in a litigation, and we have ample food for consultation. So let's hope for the best. Next question is transporter carrying individual consignment of less than ₹50,000. So when I am sending any goods to a transporter, say value of ₹10,000, and Hardik bhai is also giving goods of 10,000, and Rahul bhai is giving for 40,000, we all are not required to issue a e-way bill or to generate e-way bill. But transporter who is transporting these goods, for him this truck load will be more than 50,000, and as per rule 138 sub rule 7, it is the duty of transporter to raise combined e-way bill for all the goods if the consignment value is exceeding 50,000. So that is what my view is. If anyone wants to add something.
No, agree.
Okay.
Agree.
The last one. Rahul bhai,
whether it is mandatory to file ITC 04. As such, ITC 04 is for the purpose of job work, and the section 143 specifies that the procedure for the job work. Section 143 says whenever any person is removing the goods for the job work, he may intimate to the department. Now, intimation is not like that. We need to, anytime I am sending the goods for the job work, I need to intimate and go to the department and intimate. So ITC 04 is indirectly an intimation to the department that I have removed the goods for the purpose of job work. And even that section 143 says, as per the procedures specified, and the procedure that is specified under rule 45, it says that every person who is removing the goods under the job work need to give the detail of delivery challan in the ITC 04. So it is mandatory to file ITC 04. There is no escape from that.
Yes, I am agree to this. Friends, with this, we are ending our session here, a panel discussion, and I request all, if you have any questions still in your mind, then you can email to us. We are having a bonus round tomorrow, and we will discuss all the questions pending for you. And I request Hardik bhai also to remain present at the time of discussion. So friends, we are at Ahmedabad branch of WFC of ICI. Thankful to our panelists, Hardik bhai and Rahul bhai, for giving their precious time and resolving the issues asked by our participants. Thank you, participants. It is definitely a great session. Thank you very much.
Even thank you to our Honorable Secretary Bishan bhai. To remain present as well as to consider this panel. Thank you so much, Bishan bhai. Thank you, Hardik bhai.
Thank you.
Bye. So tomorrow at 5 p.m. right?
5. Yes.
Okay.